problem. And they also called out severe weather delays.
Severe weather delays.
That's I think the big payout problem. But let's get rid of Bailey because we have Claudia Sam waiting.
Wow, just tossing you out.
Sorry, Bailey.
It's Thursday though, not tomorrow.
Not tomorrow. Okay.
But wait, you're not going to get married or something this weekend?
I'm not getting married this weekend. I'm tasting the menu tomorrow.
Okay.
We got to decide what's going to be on the menu. Not getting married till June, so technically.
Pigs in a blanket. That's my only
so
request.
We still have time to get an invitation.
Yes, we do.
Bye, Bailey.
Yeah. We'll see. Where's the wedding again? What time? Okay. Bailey Lifshotz, thanks so much for joining us. Why don't you bring in our next guest there?
Well, Claudia Sam is the founder of Sam Consulting. She is obviously a former Federal Reserve economist. We'd love to talk to her both here and on Bloomberg Surveillance. She is also the creator of the Sam Rule, which is a recession indicator, and a Denison University graduate.
So the Denison, you guys are the fighting.
I'm from Granville, Ohio, so for me that's a big deal.
And it's a Denison fighting.
They're the Big Red, I think, is what they're called.
Okay, very good.
It's not really a sports thing, but
more of a fun school.
It was a fun school. Then it became a very serious school in the 90s when I was living there, although I did see fish there, which was pretty awesome. Claudia joins us to talk about the economy, obviously, and not her college experience. And you also wrote a column, Claudia, about Americans basically, trying to answer the question that we're asking every day, which is, why are the numbers so good and Americans feel like the economy is so bad? 5% GDP, and yet everyone says a recession's around the corner. How's that going to happen?
Right, and to be clear, there's a lot of reasons to be gloomy. Inflation is high. There's a lot of uncertainty. The question is, why are the extra gloominess, right? And things are, as you said, there are a lot of good things. Unemployment is low. It's been low for almost 2 years, under 4%. Like, that's really good. And if you ask people, how's it going? What kind of news have you heard about the economy? It's as bleak as when you go back to the 1970s and early 80s, right? It's very hard to say, oh, that totally makes sense. Like, there's these bad things happening in the economy. It's that extra kick. And frankly, that's the piece we want to understand, because it could really be telling us something bad is around the corner. People have been doing that for 2 years. And then it's like, okay, what else is going on here?
Well, we can't underplay the importance of inflation to a normal American who is living paycheck to paycheck anyway. Economists love to look at core inflation measures, which take out all the stuff that we spend our paycheck on, right? Food is expensive. Right now, cars are incredibly expensive, plus financing has climbed. Houses are you don't even want to talk about, because that's not even affordable if you can find one. So is that the main problem that Americans have?
Inflation has always been something that people would get riled up about, rightly so, right? And the price tags are legitimately higher and they're not coming down. What we've seen this year is it's slowing down. Inflation is coming down. That is a form of relief, and that it could have been a lot worse. And there's lots of different pieces of good news that don't come up. We found out last week that household net worth for the typical family jumped 37% pre-pandemic to last year. And that was across income groups, demographic groups. You just saw these big increases. And that matters. Living paycheck to paycheck has been a problem in the U.S. economy for decades. Many people have bigger paychecks, and there's a lot of people who have a little bit of a buffer that have never had it. So it's tough to see all those pieces come together and then have this absolutely bleak outlook for the economy.
Well, Claudia, how much of it is the income inequality, wealth inequality in this country, where the top 10% are doing fine, actually better than fine, but the rest are really struggling with inflation, that type of thing. How much is that to kind of account for it?
This is the rarest of post-recession periods in that we've seen often the bottom do better than they have coming out of any recession. I mean, the top's always going to be fine, right? Wealth inequality, income inequality has been a problem in the United States for decades and decades. We actually saw some compression of that inequality, so it's shrinking some. I mean, you can't hardly see it on the graph, right? It's still big. So that inequality is out there. People tend to focus on what's in front of them, like what they need to do to put food on the table, roof over their head. And there are some surveys, if you ask people about their own finances, they're more upbeat than when they look out at the economy. And so that's why I've written 2 pieces now at Bloomberg about this extra pessimism, trying to explore what it could be. And often it points to things that go beyond the economy, because we're asking people big picture about their outlook. And there are other factors at play. We went through COVID, and the war in Ukraine is ongoing. We've had so much bad news since the pandemic began. And then we do have features of how we transmit that bad news out into the public. And that's something that's different than the 1970s.
Yeah, social media is what I assume what you're talking about here.
Yes.
And I think we all know now that the way for Elon Musk and Mark Zuckerberg to make money is for people to get angry and hateful on social media. That drives engagement, and at the end of the day, the bottom line. So it kind of amplifies everything that's bad, doesn't it?
Right. And we've always had the case that bad events happen, the news comes out, it has a bias towards the bad. There's research, news organizations, right? It's more negative. It leads, it leads, right? So this is not new. But what happens is once it gets on platforms, social media platforms, it can spread far and wide and really fast. So it makes this bad news very personal, because it can be conveyed by real people and not necessarily, print media or, on the TV. And it absolutely is the case that not only does negative spread faster, it gets absorbed. Like there's a human tendency towards the negative. So it's like you put these 3 factors together, really bad events, news has a bias towards the negative, people love the negative, and then we can spread it really fast. So that's one way to think about it, that you could get this extra kick. But absolutely, we talked about a lot of economic factors that may not be captured, may be different in the past. That could be in there too. So it's really important to kind of pull this apart and figure out what's going on, because if people are really downbeat, it can create a self-fulfilling prophecy in that they pull back and they get more downbeat. And then before we know it, we're in a recession. So this is an important question. People could be right. I mean, we could really be in a bad place in the next year or 2.
Well, and a lot of times when we get into a bad place, our leaders will hopefully come together and pull us out of it. And currently doesn't look like that's a possibility. In this climate in Washington with, the lack of any kind of bipartisan. In fact, you'll be thrown out as Speaker of the House if you reach across the aisle to make a deal. And deficits continue to climb. Now the latest look is about $2 trillion. Does that affect people's outlook? I mean, you say they're doing well at home, but they're gloomy about the economy. Could it be because they see, the USA government train kind of running off the tracks?
In some of these sentiment surveys, they ask people about government economic policy. It probably doesn't surprise anyone that the government scores pretty low and has for some time. It's not clear to me that that's changed dramatically. You see it do move in debt ceiling moments in the past, where people get more negative. It's more of that reality, what happens if we were to go into a recession. Typically, there's a saying, we're all Keynesians in a foxhole. So the money would go out, the stimulus checks have gone out. But what would be problematic is if it were a severe recession, I mean, we will hopefully never see anything like COVID again, is that it wouldn't last real long. And that ends up hurting people at the bottom the most, right? Because they probably aren't recovered right away. So a government that doesn't have it all together will cause problems for people. I mean, real people are going to suffer in the case of an economy going down.
So where are you right now, Claudia, with your economic outlook?
It's tough. I wrote some on my Substack last week, really we got to celebrate the wins here. We've seen inflation come down pretty notably, whether you're looking at core or total inflation.
Guys.
Yeah, I mean, I tried to hey, there's some good stuff out here. knowing that this wasn't going to amplify through social media, it's kind of hopeless. But there are plenty of dark clouds on the horizon. Interest rates are up. They've gone up a lot. And you are starting to see it in when you ask businesses with their investment plans, in some of the consumer credit quality measures, like the delinquencies. They fell after the pandemic, because again, we gave people so much relief. They're moving up. And we could be moving back to quote unquote normal, where there's just a certain level, or this could be a sign that it's getting, like, people are in a more precarious place. And yet, like, we've been kind of saying that at different times over the last 2 years, right? The recession is always coming, and it will someday. Like, we don't escape these over the long term, but things have been better than we thought, or people were saying, or businesses were saying. So we could still balance it out, moderate some things, and keep going. But it's not what should happen, right? What should happen is that we go into a recession. That's not my base case, but I know that's the reality of everything that's lined up.
All right, Claudia, thanks so much for joining us. Always appreciate getting a few minutes of your time. Claudia Sahm, founder and independent economist at Sahm Consulting, talking about this economy. And maybe people are just a little too negative here. The misery index was twice as high in the 1970s than it is now. Yet consumers report hearing negative things about the economy at a much greater rate. Social media is partly to blame. That makes a lot of sense to me, because social media amplifies both sides, it seems like.
Some would say social media is a cancer on society. Although, a reminder, it's still just media, right?
Yep.
It's just in a different form. Claudia makes that point as well. You know, we always tend towards the negative because that's what drives clicks.
Yep, that's what drives clicks, and that's what drives advertising dollars. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. United Auto Workers head Sean Fain says the union has their sights set on car makers in the U.S. that employ non-union workers. Bloomberg's Joan Doniger has more on one automaker that may be part of his plan.
Musk's Tesla could be the next target for the United Auto Workers Union, fresh off what it says is its victory over Detroit's Big Three. Tesla's plant in California has a UAW organizing committee whose members are talking to co-workers about why they should form a bargaining unit. But Musk is notoriously anti-union and has pushed back hard against previous union drives there.
Shares right now up nearly 1%. And Stellantis says strikes that curbed output at its North American facilities cost the Jeep maker more than $3 billion in revenue. But the company still reported better than expected third quarter revenue, boosted by stable pricing, improving logistics, and growing demand for models like the electric Jeep Avenger. Right now, Stellantis shares up 3.5%. And JetBlue reported a worse than expected loss due to constraints on its operations. Bloomberg's Isabel Lee has details.
They're banking on international travels for their growth in the next quarter. So this just really shows that some U.S. carriers have been hit harder than others. But overall, the industry is just in general grappling with the waning demand, aircraft delivery delays, and parts shortages. And this also comes in the middle of a crackdown on airline consolidation this week, in which the U.S. Justice Department claims that JetBlue's bid for Spirit would limit flight operations.
JetBlue also blames air traffic control and weather-related issues and competition from mid-sized carriers that are cutting fares to fill seats. Shares right now, they're down about 10%. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ now in the red. We have got the Dow Jones Industrial Average down 48 points to 32,880, a decline of 0.1%. The S&P 500 index now lower, little change, down 1 point, drop there of less than 0.1%, while the NASDAQ Composite Index down 33, a decline of 0.3%. Only hours to go until Wall Street wraps up a jittery month. Stocks fluctuating, bonds are mixed. Right now we've got the 10-year 4.86% with the 2-year that's yielding 5.06%. Spot gold down $5.50 the ounce to $19.90, a drop of 0.3%. West Texas Intermediate crude up 0.1%. $82.42 right now for a barrel of West Texas Intermediate crude. Consumer confidence dropped to a 5-month low in October, weighed down by dimmer views of business conditions and concerns about high prices. Dana Peterson is chief economist at the Conference Board. She was a guest right here on Bloomberg Markets.
This is another month where it's down, so I think even though it may have been slightly higher than what people were expecting, consumers are still cautious. They're cautious about the present situation as well as the outlook, and I think that's the story you want to take home for today.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. JetBlue Airways shares now down 11.5% after the carrier forecast a worse than expected loss this quarter. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie Pellet, thank you very much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive.
You see Charlie's costume yesterday?
I did.
He was dressed up as the king.
The king.
But only briefly.
Yeah, I thought we'd go a whole day with that.
Yeah.
It was all about a sales event and just wanted to go and give tribute to our rock stars.
But tonight, will you, that's nice, Charlie. Tonight, will you dress up and go around whatever part of this urban metropolis?
No, I don't think I'm going to be doing that. You know, I'm going to be staying home and...
Passing out candy?
Nah, our building has that optional. That's one of the things that listeners across America may not get a grasp on. But when you live in an apartment in New York City, people, for whatever reasons, don't necessarily want little people knocking at your door. So our building has a sign-up list as to whether or not you will be able to hand out candy.
What a horrible society.
What a wonderful society. I mean, you know, my wife and I were talking, but we don't want little kids coming, knocking on the door, scaring the dog, scaring the cat. And then I got to be, standing there handing out stuff. So
what a Scrooge.
I'm not a Scrooge. You have the option to sign out. And, people respect privacy in New York.
Man, at this point in his life, he's opting out of more and more things.
I'm so glad I live in the suburbs. Today is the best day of the year to live in the suburbs.
Well, Matt raises the question, which Indy 500 driver are you dressing up as today?
I'm dressing up as a MotoGP pilot, a motorcycle racer called Fabio Di Gianantonio.
Of course you are. Who wouldn't do that?
And who wouldn't? And Paul Sweeney?
Oh, please.
But you'll hand out candy, right, Paul?
Sure, absolutely.
I'm going to hand out full-size candy bars.
Yeah, that's right.
None of the snack-size crap.
No, we're going for the big time. All right, Snickers. Charlie Pellet, thank you so much. We appreciate it. Let's get back to business here. Here's an interesting paragraph. The Federal Reserve's policy statement is setting up to be the #2 event on Wednesday, with investor focus instead likely to be on the Treasury Department's new borrowing plan, due hours ahead of the interest rate decision. The reporter responsible for that pithy little paragraph is Liz Capo McCormick. She joins us here via Zoom. She's the chief correspondent for macro markets with Bloomberg News. All right, Liz, I mean, smart people like you, Ira Jersey, Lisa Abramowitz, they tell me I have to focus on this Treasury auction. Why? I mean, don't they do this all the time?
They're just laying out the auctions to come, right?
Oh, okay. So what do we need to focus on here, Liz?
Yeah. Hey, side note, I want Matt to dress to get those full-size candy bars. You know, we capos always went to those houses. But it's the refunding, as they call it, where, like Matt's saying, they lay out their plans for the quarter. I mean, officially, the refunding issues, like the securities, are the 3-year, the 10-year, and the 30-year Treasury. So those securities will be sold next week. So they're going to tell you how much. But what they've been doing is laying out their plans, saying, like, over the whole quarter, by the way, this is our schema for sales of all other maturities. So it's kind of a big one because, as you guys have been talking, a lot of debt supply coming. We know there's a bit of a disagreement among dealers, it's less than half, but there's a decent corral that are saying Treasury may kind of tweak up the schema that they did in August. So there's a lot of eyeballs on this, I think.
Yeah, help me get into the weeds here, because yesterday we heard that the government's going to need $776 billion. That's the shortfall that we need to make up for this quarter. And now I'm seeing headlines that Wall Street expects the refunding to be like $114 billion. That leaves a huge delta. So what gives?
I feel like this is my moment. I could maybe retire after this, that we're talking about all these Treasury things, because, so Monday, before the refunding week, which is this, on Monday, Treasury lays out in aggregate for the whole quarter, what are their financing, their borrowing needs. So they gave a round number of, like you said, 776 for the October to December quarter. And that's for everything. That includes bills, whatever they're going to sell, notes and bonds. So that's different than on Wednesday, that refunding pile, those 3s, 10s, and 30s, that's where you see that 114 billion number. So there's not going to be a shortfall between the two, because like I said, Treasury's also going to lay out, hey, how are we going to do that 776 billion we mentioned on Monday? We're going to do it by, besides these refunding things, we're going to sell more of 2-year notes and 30-year bonds and 20-year bonds and a lot more bills. They're going to lay out the whole agenda of all their securities they have. So that's why because there is a lot of confusion. It seems like, what's the difference? But yeah, one is like an aggregate for everything and one is per specific security.
Yeah, it seems like refunding. Wait, is refunding just notes and bonds? But they're already like selling so many bills that it's going to be massive?
Yeah, so refunding issues are where they talk about what we call their coupon-bearing debt. So that's right, 2 years out to 30 years. But in there, the Treasury always says, hey, basically, the rest of our stuff we got to deal with, we're going to do in bills, right? So we know there's been a lot of bill issuance since the debt limit was decided in June. I think my colleague Alex Harris had a great story yesterday laying out some, dealers differ on just how there's already been over $1.5 trillion net new issuance of bills this year. And there'll still be a lot more, but Treasury tries to balance. They want, their borrowing committee has said, usually we like the Treasury bills as a share of the whole debt pile to be like 15 to 20%. We're running a little higher. They say that's okay for now as they you lay out all the schema, but they're trying to balance, kind of the average maturity of their debt, Matt. So it's kind of a good number. So yeah, tomorrow we're going to get details on kind of the whole schema of things.
All right. So the Treasury, the message is ramping up sales of longer-term debt to fund a widening budget deficit. So that ramps up the supply, pushes the price of these treasuries down, pushes rates up, which is at loggerheads with what the Fed's trying to do, I think. Maybe say, hey, so what's an investor supposed to do here?
Yeah, so it's tough. And not to be too wonky, but we've had times with treasuries upping supply, like during the pandemic, and rates were going down, right? Because the Fed was cutting rates and all this other stuff going on. The economy was cratering. Now there's a feeling like, all the supply, demand, some of the usual demand folks are stepping away. So yields may, they call it on the margin, go up a little bit. So for an investor, I think that's why they're so focused on this, because, these investors trade any maturity they want, so they might shorten duration, long duration. So I think they're very interested to see kind of where does Treasury lean most heavily for this issuance? Are they doing more in the 10-year, et cetera? Are they saying, hey, let's actually do even more bills? So I think that's what an investor now. If we fall into a recession and the Fed cuts rates, supply will kind of drift to the background a little, but we're kind of a long way from there. Like you guys have been talking about the data, we don't have kind of any recessionary signals as of yet. Fed saying we're not even talking about cutting. So I think we're a long way from the Fed kind of giving the Treasury a solid in a sense.
Yeah, right when the Fed stops buying, that's when we boost issuance like it's nobody's business. Exactly. Help me understand something. I promised we wouldn't talk about this, but the Bank of Japan, I already had trouble with the idea that when they let their long-term yields rise, it pushes Treasury yields higher. I don't get that math, but what did they do last night?
Yeah, so they've had this yield curve control, like they tweaked it a little once before, but basically until yesterday they were saying basically 1% on the yield is like the limit. We're going to come in and buy all of the debt we need to make sure it doesn't go above 1. Now, yesterday they said, well, it's kind of a reference rate, so we're there. It's not clear. They're gonna, they'll defend it to a point. They want things to move slowly, so they left a little bit more squishy, right? It's not a hard limit, 1%. So that means maybe there's some more upward drift in JGB yields, given what they said. But it wasn't as aggressive as some had wanted them to kind of like scrap yield curve control. They didn't quite do that yet, but they seem to be gingerly letting it go slowly.
All right, Liz, thanks for taking the time to speak with us as always. And again, the takeaway here is the big bond market event Wednesday is at Treasury, not the Fed. You heard that here first from Liz McCormick, Chief Correspondent, Global Macro Markets for Bloomberg News. So, I've learned a lot about this whole refunding and all this kind of stuff.
It's super fun, right?
Oh, it's fun.
It's
fascinating.
fascinating.
What's fun when we get to talk about it with Liz. With other folks, maybe not so much. But Liz makes it interesting here. S&P 500 up 0.2%.
I'll tell McKee you said that.
Yes, I was thinking exactly about Mr. McKee. NASDAQ absolutely unchanged on the day, so not a lot happening there. On the yield front, just to round it out, 10-year Treasury is off about 2.5 basis points here, 4.86 right now. Let's head down to Washington, D.C. Nancy Lyons has got World and National News.
Thanks, Paul. President Biden's two foreign policy lieutenants, Secretary of State Blinken and Defense Secretary Austin, have been testifying today before the Senate, pushing for the latest emergency funding request from the administration, asking for $106 billion to support Israel, Ukraine, and other security priorities. Blinken says the money is desperately needed to protect U.S. interests.
The President's request would secure the urgent resources that we need to continue to lead. Secretary Austin and I believe it important for us to be here together today because in this mission, as in so much that we do to advance America's national security, our defense, our diplomacy, our development must work hand in hand.
Blinken's testimony was interrupted numerous times by protesters who support Palestinians in Gaza. Israel's military continues its push into Gaza, facing fierce battles with Hamas militants. Israeli officials say they attacked a Hamas outpost earlier, killing dozens of Hamas militants, including those who were about to launch rockets. Bombs and guns were also confiscated. A case centering around when a government official can block access to their social media has been heard by the Supreme Court today. At issue is when a government official uses social media in an official capacity, and if blocking other users from seeing their posts amounts to a violation of the First Amendment right to free speech. The criminal fraud trial of failed crypto king Sam Bankman-Fried is winding down. Today he finished testifying and the jury was sent home. Tomorrow, closing arguments are expected. The former CEO and FTX founder is accused of fraud after the exchange and its associated trading firm collapsed late last year. Bankman-Fried has pleaded not guilty to the charges. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the developing story. Headline out of the Middle East. Israel's IDF says another barrage of rockets has been fired at Tel Aviv and central Israel. That headline right now on the Bloomberg Professional Service. Wall Street heading toward the end of a jittery month with stocks fluctuating, bonds mixed, choppy trading session with the S&P and the Dow back in the green right now. Last update, we told you stocks were lower. Right now, the S&P is up 6. That is a gain of 0.2%. We've got the Dow up 12, gain there of less than 0.1%. NASDAQ lower by 3 points, little change, down less than 0.1%. 10-year yield 4.86% with a 2-year that's yielding 5.07%. Spot gold down $5.50 the ounce now to $19.90. That is a drop of just about 0.3%. West Texas Intermediate crude lower little change, down 0.1%. 82.20 for a barrel of WTI. Well, given the challenges facing tech stocks in recent weeks, where does one invest? Dan Gerard is senior multi-asset strategist at State Street Corporation. And on surveillance this morning, he told us there is a very good case for cash.
If we play out the scenarios, if we don't think the Fed is cutting in the next 6 months to 8 months, and we think that we've got a potential for upside yield risk on the long end still, I think it's still a bit asymmetrical, then why not? You're not losing much reinvestment opportunity by just going into a year or shorter duration and hanging out there.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcast. Tesla shares set to wipe out nearly 1/5 of their value in less than 2 weeks amid growing concerns that demand for electric cars is starting to weaken. Tesla shares today, they're up by 0.7%. Rival Lucid up by 1.3%, and another EV maker, Rivian Automotive, up by 3.5%. Again, recapping, NASDAQ now higher, little changed, up 1 point. S&P up 7, up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. As always, Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are streaming live as well on YouTube, so head over to youtube.com and search Bloomberg Radio. Let's get to our next guest straight away. Ward Bortz joins us. He's an ETF portfolio manager, head of distribution and public strategies. The firm is known as Angel Oak. We appreciate chatting with Ward via Zoom. Hey, Ward, talk to us about Angel Oak. What's the focus of your strategy there at Angel Oak?
Yeah. Well, first off, thanks for having me, and happy Halloween. Angel Oak is a $17 billion fixed income asset manager. So I was just listening to the update from prior to the. Yeah, exactly. And he talked a little bit about money markets, and this is something we're seeing with the volatility you've seen in the equity market and the choppiness you've seen in the equity marketplace. We're seeing investors look to fixed income because you're getting yields that you really haven't been able to get in a very long time. And, Angel Oak's an expert in that, and we tend to focus primarily on mortgage credit. So not just fixed income broadly, but mortgage-backed securities, which, interestingly enough, as you might expect, we think are quite attractive right now.
All right, so I'm just looking at my IN-Go function for the Bloomberg Index browser, and U.S. mortgage-backed securities down 4.31%. That is the total return for the year, and I believe 2022 was brutally on the negative side as well. So talk us about what's happening in the MBS market.
Yeah, I think, well, let's start with what happened in 2022 and 2023 in fixed income, because that's really what's creating the opportunity. For years, investors would complain to me about, there's no yield in the fixed income market. I can't do anything in fixed income. And, it's been a painful journey to get to a place where we can where there's actually opportunity. It started with 2022 with, the ag off around 12%. And then this year hasn't been much better, particularly for longer dated bonds. And that's important. Longer dated bonds have underperformed this year. On the shorter side, you've actually seen relatively strong performance, whether that be money markets or cash. like we talked about, or say the 1 year or 3 year point in the curve, you've actually seen decent performance this year. Call it delivering between 1 and 5%, depending on what exactly you're investing in. So where does that leave us? That underperformance that we've seen in 2022 and 2023 is really what's creating the opportunity. As yields and spreads look to kind of revert and decline, particularly on the spread sides for mortgages, we think that there are unique total return opportunities compared to what you've had really in the last, call it, decade plus in the fixed income marketplace.
All right, so let's say I wanted to increase my exposure to the mortgage-backed securities market. How would I do it? How would you recommend?
So the easiest, kind of most vanilla way is to buy an ETF or a mutual fund that tracks agency mortgage-backed securities. And so here you're going to be investing in pools of mortgage bonds that are backed by Fannie Mae and Freddie Mac, so effectively government guaranteed. And you get a spread to treasuries for investing in mortgages as opposed to treasuries. So that's the simplest way. MBB is a well-known ticker in the space, very inexpensive. The challenge with that, or the risk that you're taking on, or one of them, is that those are relatively long duration. So similar to buying 10-year treasuries with a little bit of spread because they're mortgages. If you want to do something a little bit shorter, you could buy something that has more of a non-agency focus. So these aren't going to be government guaranteed. These might be jumbo mortgages. Mm-hmm. So those are mortgages that for homes greater than, say, $700,000 to $1 million, depending on what part of the country. And here, these tend to be shorter dated. And these shorter dated securities have a little bit less interest rate sensitivity, but you're still getting that premium for investing in the mortgage marketplace.
All right, so if I want to invest in the mortgage market, I have to ask the question, how is the underlying paper there? How is the underlying homeowner, consumer, and how's the credit quality of that paper?
Well, you can think about what's happened in the housing market. Every day you read an article about what's gone on in home prices and what continues to go on in home prices. Somebody sent me an article, Bloomberg article actually, about 5 minutes before I got in here, saying that we're hitting all-time highs in Atlanta, where Angel Oak is based, and that's a great thing for mortgage-backed securities, right? Because we made loans to people, effectively, pools of people, in 2019, 2020, and let's say we made a loan on a $500,000 house. Well, if the market's appreciated by, say, 20% since then, we made that same loan. The amount that we've loaned has either stayed the same or declined, but that home price has increased. So that's increased equity built into all the securities that we have in our portfolios. That gives us a lot of confidence that these mortgage-backed securities are effectively, money good in our view.
All right, so you're down in Atlanta. You brought it up, so I'm going to ask you, why is every single business address that I see coming from Atlanta, Peachtree? Is that the only street name you guys have in the booming metropolis of Atlanta?
I moved here 4 years ago from New York City, and we are still getting our Peachtrees confused. And my parents still send us packages to places that are completely different Peachtrees. So I do not have a great answer for you, but I would agree that as a transplanted Northeasterner, I'm in the same boat. It's confusing as can be.
Exactly. All right, real quick here. The 30-year mortgage is 8%. I mean, where do you guys think the mortgage rates go over the next year or so?
It starts with what's our view on interest rates.
Yep.
And so for shorter dated interest rates, say 3 years and in, we think we're close to peak policy.
Okay.
Or probably at peak policy. So we don't think that there's too much more room to go higher in the shorter end of the interest rate curve. On the back end of the curve, which is what mortgages are going to be priced off of, we do think that there is it'll either stay flat or maybe go 25 to 50 basis points wider. We think mortgage-backed security spreads, which is the difference between that interest rate and the 8% that you quoted.
Yep.
We think that spreads will roughly remain the same. So our kind of view on will either remain the same or decline. We don't think that they're going to go up much.
All right.
So we think that 8% is pretty stable.
All right. Well, I like to see it go down, but I like to refinance. Ward Bortz, ETF portfolio manager, head of distribution, public strategies at Angel Oak, located in Atlanta, Georgia, on, you guessed it, Peachtree Street. We'll have more coming up. This is Bloomberg. Let's go to Lisa Mateo right now for some company news.
Thanks, Paul. Caterpillar posted earnings at top analyst estimates, but a drop in its order backlog has shares lower. We have more from Bloomberg's Abigail Doolittle.
There was a year-over-year decline of $1.9 billion. That is the first since the third quarter of 2020, when it really had to do with pandemic supply issues and the like. So this is a bit of an outlier. And we also have Baird saying that some of the dealer inventories, well, they're continuing to grow, which essentially means that they're not going to have to order as much, showing up in the backlog. Investors nervous that this could continue.
Now, shares right now, they're down about 6%. And Pinterest reported sales that beat expectations. Bloomberg's Ed Ludlow says the social media platform's shoppability strategy is paying off.
The investments that they've made in artificial intelligence driving the user base to make purchases in the e-commerce context based on the images that they're looking at. A beat on the top and bottom line, revenues coming in at $763.2 million, ahead of estimates, adjusted EPS 28 cents per share. The estimate was for 20 cents. What's most interesting is the monthly active user base. 482 million users, monthly active users, is a record.
Now, a big bulk of those users, they're coming from outside the U.S., Canada, and Europe. Right now, we're checking in with shares of Pinterest. They are up about 18.5%. And fewer people are getting Pfizer's COVID shot and Paxlovid pill, and that's led to lower sales. Pfizer's third quarter results missed expectations, with sales falling 42% to $13.2 billion. Now, the loss is Pfizer's first on an adjusted basis in at least 33 years. Shares right now down about 1%. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, kind of a little bit of a lift here on the S&P 500 up 0.2%. The NASDAQ essentially flat on the day. The two-year Treasury, that is up 2 basis points, 5.07%. The 10-year is actually off 3 basis points, 4.86% there. So we'll keep an eye on that. WTI crude oil turns a little bit negative here, off about 0.2%, just above $82 per barrel for WTI crude. Right now, let's head down to Washington, D.C. Nancy Lyons has got World and National News for us.
Thanks so much, Paul. Israel's ground campaign is continuing with armored vehicles reported to be on the outskirts of Gaza City. Bloomberg's Oliver Crook has more on Israel's strategy and how it impacts Palestinian civilians.
They've sort of bisected the territory, telling all of the civilians to go to the south. We understand from the IDF that they think 800,000 of the civilians have gone from the north to the south, which still leaves quite a number of them up north.
Bloomberg's Oliver Crook reporting from Tel Aviv. Some believe the slower pace of Israel's offensive is aimed at limiting civilian casualties. Secretary of State Antony Blinken and Defense Secretary Lloyd Austin are defending the Biden administration's $106 billion emergency funding request for Israel and Ukraine. They've been testifying today before the Senate Appropriations Committee.
Ceasefire now! Blinken's opening statement was interrupted several times by the shouts of pro-Palestinian demonstrators, which he acknowledged.
I also hear very much the passions expressed in this room and outside this room. All of us are committed to the protection of civilian life. All of us know the suffering that is taking place. All of us are determined to see it end.
The extra spending, which also includes humanitarian aid for Gaza, has the strong support of Democrat Patty Murray, who chairs the committee, and Republican Susan Collins, the vice chair. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration is taking another step toward eradicating junk fees, this time targeting fees associated with retirement planning. The Labor Department is proposing a new rule that would require financial advisors to consider the best needs of the client and not the best commissions for themselves. The rule specifically targets rollovers from 401k plans to IRAs and recommendations made to employers on which investment funds to offer in retirement plans. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy Lyons, thank you very much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. Let's talk about Tesla. Tesla shares are set to wipe out nearly 1/5 of their value in less than 2 weeks amid growing concerns that demand for electric cars is starting to weaken. The sell-off started earlier this month when the electric vehicle giant dialed back growth expectations during its third quarter earnings call. That was followed by grim commentary from several global automakers as well as Wall Street analysts. This week, battery maker Panasonic Holdings and chip maker ON Semiconductor also sounded alarms for the EV industry. The warnings have weighed on stocks across the U.S. automotive sector, which has also been battling extensive negotiations with its labor unions over wages. Still, Tesla decline stands out. Shares have sunk around 20% since the October 18th report, compared to a 3.6% drop in the S&P 500 index and a more 4% decline in the NASDAQ 100. The retreat in the EV maker stock price has erased about $145 billion from the company's market capitalization. The outlook for autos overall has been darkening as high interest rates have sent the cost to own a car soaring. When coupled with rising inflation, consumers' ability to afford big purchases has been squeezed. EVs, still a relatively new technology with an undeveloped charging ecosystems, are getting hit first. So we'll keep an eye on that story right now. Tesla, the stock is up about 1% today, and on a year-to-date basis, about 61%. But when you look at the stock on a trailing 12-month basis, it's actually down about 12.5%. So again, the real issue there for a lot of these EVs is ultimate demand out there in the marketplace. S&P 500 up 0.25%. The NASDAQ up about 0.1%. 10-year Treasury, it is now yielding 4.85%, off about 3 basis points. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The administration makes the case for funding Israel and Ukraine. Welcome to the fastest show in politics as the debate over funding gets real on Capitol Hill. Even as we watch both wars unfold in real time, we'll have the latest from both sides of the Atlantic and both ends of Pennsylvania Avenue in a conversation with Michael O'Hanlon from the Brookings Institution with analysis from our signature panel. Back together today, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. They're with us for the hour with a lot to cover, and we start, as always, on Wall Street. An update on trading now from New York. Here's Charlie Pellet.
Hi, thank you very much, Joe Matthew. Choppy session, but best level of the day right now on the S&P 500 index, up 11. That is a gain of 0.3%. We've got the Dow higher now by 38 points for the Dow. That is an advance of 0.1%. With the NASDAQ Composite Index higher by 13 points, up by 0.1%. Bottom line here, Wall Street heading toward the end of a jittery month. Stocks fluctuating, bonds mixed. Right now we have got the 10-year yielding 4.85% with the 2-year at 5.07%. Spot gold lower, little change, down $6 the ounce, back to $19.89. And West Texas Intermediate crude is down 0.3%, 82 even a barrel on WTI. Federal Reserve policymakers have begun their 2-day meeting with a decision expected tomorrow. We'll have the decision and the news conference for you live, 2:30 Wall Street time with Fed Chair Jay Powell. Stephen Stanley is chief economist at Santander U.S. Capital Markets, and he was interviewed this morning on surveillance.
Since the September meeting, we've had a blowout payroll number, a high inflation number, stronger than expected consumer spending, and now we get a firm wage number. So, you're pretty much a clean sweep, and yet they're clearly going to pause.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Caterpillar shares moving lower as the machinery maker reports a decline in its order backlog, indicating customer demand may be waning in the months ahead. Caterpillar shares down 5.9%. Pfizer's sales missed expectations for the quarter as its COVID-19 shot and pill continue to create instability for the drug maker's efforts to transition out of the pandemic. And again, Pfizer down now by 1.3%. Recapping, stocks higher. S&P best level of the day right now, up 11, a gain of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to the Tuesday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where the debate around funding the wars happening between Israel and Hamas, Ukraine and Russia finally gets real, with lawmakers coming back into town today. And it's taking place as Israel's military engages in fierce fighting with Hamas deep in the Gaza Strip today. The headline on the terminal, no hostage deal in sight as army battles in Gaza. That is not the way Benjamin Netanyahu sees it, of course. He talked about it in a news conference right around this time yesterday, putting the ground offensive on par with the mission to rescue hostages. Some say you can't have one without the other, including Benjamin Netanyahu.
Our common assessment of all of the, not only the cabinet members, but also all the security forces and the military, is that the ground action actually creates the possibility, not the certainty, but the possibility of getting our hostages out. Because Hamas will not do it unless they're under pressure. They simply will not do it. They only do it under pressure. This creates pressure.
Now, today, fast forward a few hours, members of the administration are making the case on Capitol Hill. We already told you that it will likely be a vote on Thursday in the House of Representatives, specifically on Israeli funding, not Ukraine or any of the other matters that were put into this request from the White House. But lawmakers on the Senate Appropriations Committee are talking about how exactly they might be able to do both if possible. There to make the case, the Secretary of State Antony Blinken.
I also hear very much the passions expressed in this room and outside this room. All of us are committed to the protection of civilian life. All of us know the suffering that is taking place as we speak. All of us are determined to see it end.
And this is a hearing that has not been coming easily, with hecklers repeatedly interrupting the secretary.
Not in the face of an intensifying strategic competition in the Indo-Pacific.
This went on repeatedly through the hearing.
If the witness will suspend,
Patty Murray trying to bring things to some semblance of order here, but as soon as they would put one heckler out of the room, another would pop up.
All the people of Gaza, cease fire now!
These are very
Save the children of Gaza! Save the children of Gaza!
important moments as we consider both sides of the debate here that we're going to be exploring over the course of the hour. The Secretary of Defense also in that hearing today talking about the extent to which this money for Ukraine, $60 billion worth the White House is asking, would come home to the U.S. and would go to defense contractors here.
When we send our friends munitions from our stockpiles, the money to replenish our supplies strengthens our military readiness, and we invest in American industry and American workers. That also holds true for funding for Israel or Ukraine to procure new equipment off the production line.
Lloyd Austin speaking earlier today before the Senate Appropriations Committee. As we bring in Michael O'Hanlon, delighted to say he's back with us today on Bloomberg Radio and on YouTube, the Brookings Institution Senior Fellow Director of Research in Foreign Policy. Michael, it's great to have you. I have a lot of questions for you, and I have been looking forward to this for a couple of weeks here. So thanks for making time for us today on Bloomberg. Let's begin with this idea of a ground offensive actually helping to unlock and free hostages. We saw one female soldier rescued, an Israeli soldier rescued yesterday. Benjamin Netanyahu says it is the consensus in his administration and among military and intelligence officials there that this is the best chance to save hostages is by actually moving in on the ground with the military. Do you agree?
No, I'm agnostic. I don't think that it's possible to reach that kind of a definitive conclusion. So I would disagree with anyone who has a strong opinion either way, to be honest with you, because I think it's entirely possible that Hamas would start executing hostages as Israeli troops got close, which would counter Prime Minister Netanyahu's argument. But it is also possible that Hamas might feel desperation. Leaders who were previously well protected or hidden might feel that their own lives were at risk, and they might start thinking about doing a deal they would not previously have contemplated. But they took hostages for a reason. They took hostages to have some kind of negotiating leverage at some point. They may or may not have had a clear strategy for when and how to pursue that, but they could have obviously killed all those people the same way they mercilessly massacred the 1,400 on October 7th. So there is some kind of a negotiation somewhere in somebody's head. And I don't think we have enough evidence to be confident whether the prospect of that negotiation and that deal would be improved by, Israeli forces getting closer to Hamas hiding places, or whether it would be worsened. It really could go either way, as I see it.
The head of Israel's National Security Council says there is no deal in sight to get more hostages freed. Does that speak to the calculation here, do you think, for the IDF to say, all right, then we're moving in?
I suppose, but I also think that the IDF was desirous of going in very quickly after October 7th. Israeli passions were understandably so high. And the fact that they waited a couple weeks or more before doing large-scale incursions is partly a reflection of the lack of a clear military strategy for what they would do on the ground once they were there. So I don't think it was the sort of thing where they had a well-rehearsed plan that could be implemented at any given moment based primarily on the hostage issue or other such sort of, specific and discrete kinds of concerns. I think it was the reflection of the need to figure out how to do what they're about to do, and frankly, what the objectives even were, because as we all know, right after October 7th, Israeli leaders were saying that if you're Hamas, you're a dead man walking. In other words, they were pledging the extermination of the entirety of the Hamas organization, which is an understandable reaction but probably no more realistic than the United States saying on September 12th, 2001, that we are going to exterminate Al-Qaeda. It's a goal that you naturally think about, and certainly that you aspire to emotionally, but it's probably not realistic. So that just reflects the Israelis were not really in a place initially to go in with any kind of a well-developed and realistic plan. So that's the main reason I believe it's taken them time to launch this.
Where are you on a potential end game and exit strategy here, if there is one, Michael? We're seeing more fighting, striking targets in Lebanon, Israel going deeper into the Gaza Strip. There's talk about a second or a third front, of course, and I wonder how likely do you think that is to see one break out if it hasn't already?
Yeah, it's a great question, and I've read just in today's newspapers contending points of view on that very issue by people who know Iran and Hezbollah better than I do, just to be transparent. I consider myself a general defense analyst, by the way, with sore eyes, so my apologies for the sunglasses, rather than an expert on Hezbollah or Iran. But I could see that, I would say the chances of Hezbollah unleashing an all-out attack on Israel are still less than 50-50, because Hezbollah has essentially followed a live and let live with Israel for 17 years, since the big fight of 2006. And there are reasons why Hezbollah has wanted to have the ability to strike Israel, but has not actually implemented that capability or employed that capability. And those reasons don't necessarily change with what Hamas decided to do down in Gaza and near Gaza. So I think that Hezbollah's calculus is probably only moderately or modestly influenced by what's played out over the last few weeks. But there are people who say, listen, Hezbollah can't sit aside forever and watch its sort of fellow, pro-Iran, anti-Israel organization and Palestinian people suffer the way they have and seem powerless to do anything about it. So if this thing continues indefinitely, the argument is that Hezbollah will then feel some greater incentive to get involved itself, if for no other reason than to sort of save its own pride and its place in the pecking order as supposedly the strongest anti-Israel rejectionist group out there. But I think as to the question about an endgame, I'm sort of intrigued by the idea of a UN trusteeship that brings in Palestinians of various stripes, but not Hamas, and then ultimately transitions to a Palestinian state in Gaza, and worry later about the Palestinian state in the West Bank, or maybe that peace process begins anew as soon as this war can be brought to a close. But in other words, not go back to a situation where either Hamas or Israel would be occupying and controlling the Gaza Strip, but maybe instead of trying to get this one big perfect two-state solution, which is of course so difficult and elusive, maybe it's time to create a piece of that state or one state, and then see what happens later with the possibility of a second Palestinian state that may or may not ultimately merge. This is not an idea I've heard that many Middle Eastern experts endorse, but I think it's worth adding into the mix, because if you're going to think about a post-Hamas government, you've got to think about how do you do that in a way that doesn't allow Hamas to just come back, whatever's left of Hamas, to regroup. And yet you don't want the United States to do this. You don't want Israel to do it. So it leaves the idea of a reasonably well-armed UN trusteeship, followed by, well, what comes next? I think a Palestinian state. So there's light at the end of the tunnel for the Palestinian people. Not so much that I care about Hamas, I don't, but I think the Palestinian people need that kind of a future vision to get through this.
Spending some time with Michael O'Hanlon from the Brookings Institution and sharing ideas here on Bloomberg Sound On. I wonder your thoughts about what's happening in Syria. We got a warning from the UN, Michael, warning that the war is, quote unquote, spilling over into Syria. How real is that? What are we going to be talking about a couple of weeks from now?
Well, of course, there's an irony. War spilling over into a country that's been at war itself for 12 years.
How true.
So I have no doubt that the UN's right at one tactical level, that when you have a region like this with weak governments and a lot of extremist groups, that there undoubtedly is movement across borders. And certainly some of that movement is from Syria into Lebanon with weapons that Iran supplies to Hezbollah. And, there could be other kinds of movements. I'm sure there probably are. So in that sense, yes, the war has spilled over. It already had spilled over. These different countries are part of a generalized conflict zone that may be more intense in some places than others, but is really a regional kind of, calamity. And so it's just an expansion of what was already underway. I have no doubt that's occurring. It's not my top concern in this situation compared to everything else that's at risk.
What is your top concern?
Well, getting to your earlier questions about the possibility of Hezbollah unleashing an all-out second front, I think that's the main concern, not Syria being further destabilized, but Israel and Hezbollah being at war.
Michael, it's great to have you back. Michael O'Hanlon, a senior fellow at the Brookings Institution. He's director of research and foreign policy there and sharing insights with us here on Bloomberg Radio. I'm Joe Matthew in Washington as we assemble our panel. We've got Rick and Jeannie back together today, I'm glad to say, and awfully curious to hear what's on their mind. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. There's a lot to pick through there. Rick, I'll start with you on the matter of Hezbollah. To what extent should Israel be reinforcing that northern border, and should the U.S. be involved?
Yeah, obviously, I think the northern border is a big vulnerability for Israel, and the question is how much can they reinforce with the commitment of troops that they have as they move into Gaza, and I think if there's any weakness there, the U.S. should look at putting our own troops there on the northern border to ensure that there isn't an incursion into Israel from the north. You know, it's a sovereign country, Israel. It's a democracy. It's a country that we should and have a security agreement to defend. And it's great that we have aircraft carrier and off the coast to intercept missiles and things like that they've been doing. But troops on the ground on the northern border is a real deterrent to both Hezbollah and Iran's interests here. And so I think it would send a strong message, and we certainly have the capacity to do it.
How worried are you, Jeannie, and welcome back, that U.S. boots end up on the ground in Israel, or is that what should happen?
You know, I think it's a concern. I don't think that it is something that the administration is inclined to do, and they certainly will try to avoid at all costs, and I think that is the right move. But it is a concern. I mean, we have seen and we have heard, to your point, how this is escalating and spreading. And if the U.S. gets enmeshed in that and we see boots on the ground, that is going to be a whole different ballgame. And already we are seeing the reaction from the United States public, and we are not on the ground at this point. So imagine if we get to that point, what the reaction of the U.S. public will be. And it will change the game for the 2024 election, should that happen.
And certainly change the debate, I suspect, in Congress. We're going to go there next. With Rick and Jeannie, I'm Joe Matthew. This is Bloomberg.
Profits, headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading very close to session highs right now. Choppy session, but the S&P up 13 to 4180. That is a gain of 0.3%. Final trading day of the month. We've got the Dow up 53 right now, higher by about 0.2%. The Nasdaq Composite Index up 13. That is a gain of 0.1%. Wall Street's jittery month is ending with the dollar climbing as the yen slumps toward a 33-year low after the Bank of Japan made only minor changes to its policy settings. 10-year yield 4.86% with a 2-year now yielding 5.07%. Spot gold down $11 the ounce to $19.85, drop there of 0.5%. And West Texas Intermediate crude oil lower now by 1.2%. 81.32 a barrel. Eli Lilly is buying rights from Beam Therapeutics to develop and sell treatments for heart disease that make use of an experimental gene editing technology. Shares of Lilly, they are down now by 2.1%, but Beam is surging by 12.7%. After earnings, Pinterest shares up now by 18.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
President Biden sends the big guns up to Capitol Hill to make the case for the money. $106 billion. Yeah, it's a lot of money. Of course, it goes to a lot of places. The supplemental budget request that we've talked about aimed at Israel, Ukraine, Taiwan, and our southern border. And as I mentioned, the secretaries are making the case today. Antony Blinken, along with the Secretary of Defense, Lloyd Austin. Behind them are the Senate leaders, the Democrat and the Republican. Here's Chuck Schumer earlier today on the floor.
I'm deeply troubled that yesterday, House Republicans released a partisan and woefully inadequate package with no aid to Ukraine, no humanitarian assistance for Gaza, no funding for the Indo-Pacific, and, in addition, poison pills that increase the deficit and help wealthy tax cheats avoid paying their fair share.
Poison pills. He's talking about the offsets. They're going to take money out of the IRS to pay for the money going to Israel. That's the plan, at least from the new Republican speaker. Mike Johnson talked about it in another interview on Fox.
My intention is to call Leader Schumer over there and have a very direct and thoughtful conversation about this. I understand their priority is to bulk up the IRS, but I think if you put this to the American people and they weigh the two needs, I think they're going to say standing with Israel and protecting the innocent over there is in our national interest and is a more immediate need than IRS agents.
Let's reassemble the panel. Rick Davis and Jeannie Shanzano join Bloomberg Politics contributors because this is the real stuff. Lawmakers are actually coming back into town, well, tomorrow, at least for the House, to get this debate started. They're already doing this, though, in front of the Appropriations Committee in the Senate, and that's what matters. Rick, Antony Blinken and Lloyd Austin are making the case here for what the administration sees, and even Mitch McConnell used this word, intertwined national security threats. Are they succeeding?
You know, I think they're succeeding with those people who are already likely to be supportive of the Ukraine funding measure. That's really the test kit here. Everybody's pretty supportive of Israel and the funding for them. So how do we drag through this process? Ukraine funding, you know, attached to the Israeli funding, and that's their pitch. And so I think it's working with people who are already predisposed to want to do that. I'm not sure it's being compelling to those who are either on the fence or opposed. And a lot of it is a process conversation, right? You know, just connecting these two things. I think this administration would be well suited to make a stronger case specifically for the Ukraine funding and what it's for and how it's going to be protected, you know, and how's it going to be handled in the process so that Republicans who are getting heat to change their mind and be against Ukraine funding have some better standing. But that's getting lost in the incredible amount of reporting around Israel. And so I think they've got to really focus in on this Ukraine spending and what it's for and how it'll be administered.
Well, as we discussed, Joe Biden has a friend in Mitch McConnell. When it comes to making that case, you can send the Secretary of State up there all you want, but how about the Republican from Kentucky? Here he was in Louisville making that very case, Jeannie.
So this is not solely about helping Ukraine. It's also about getting us ready for the bigger challenges we have ahead out in Asia. Right now, our efforts are making a difference, both in Ukraine and here at home. But the Biden administration's hesitation along the way has really, in my view, kind of prolonged the bloodshed. This is a moment for swift and decisive action to prevent further loss of life and to impose real consequences on the tyrants who terrorize the people of Ukraine and of Israel.
He puts them together in the same sentence. Well, he's always got to kind of jab his old friend Joe Biden while he's at it. What he's really doing, though, Jeannie, is selling the administration's proposal here, isn't he?
He is, and he has been doing that very vocally. Yesterday, that speech, the introduction of the Ukrainian ambassador in Louisville, that was just another example of Mitch McConnell publicly making the case. He did something rare a few weekends ago. He went on the Sunday talk shows and he made the same case that these should be tied together. He is the public face of the Biden administration's efforts here, but the reality is he has not been effective in selling this to his own party, because you just look at what Mike Johnson has done now with this $14 billion proposal and the payoffs he is trying to use. It's quite a heck of an opening act that this new speaker has got himself into. A bill that could have been passed with flying colors, bipartisan support while we wait for the next shoe to drop with the next CR. He's decided to step in and say, we're going to get a pay for from the IRA in terms of the money that was designed for the IRS. And by the way, if he's interested in cost savings, you don't cut IRS agents. That is going to cost more. They are going to score that as a higher cost. So he can't even make the case with a straight face that this is about cost saving. This is about him trying to placate the right of his party, and he's doing so at the expense of necessary funding for Israel. And oh, by the way, he left out Ukraine, the border, and Taiwan in the process.
What do you make of this IRS move here, Rick? We knew that the new Republican speaker was going to seek offsets, but to take the money from the IRS, it's great politics, right? I'm sure this actually is playing pretty well with the Republican base, but it would do what Jeannie's suggesting, right? If you're intent on lowering deficits, you don't cut IRS funding and limit the tax receipts coming in, do you?
Well, the Biden administration had a hard time making the case that $80 billion of additional IRS payments were going to somehow result in big tax revenue increases. And so if the Biden administration had trouble selling that, then the Republicans aren't going to have that much trouble selling that a small fraction of that being used for the war in Israel is probably not going to get much traction, right? I mean, and by the way, we kind of like the fact that Congress is actually looking for offsets, to pay for these supplementals. I mean, supplementals have been burdening the deficit for a long time, and I think it's actually a good ethic to have this conversation. If I were the Democrats, I'd say, fine, let's fund that, and let's add $10 billion to the Ukraine spending. I mean, there's a better way to do it than to somehow go out there, if I'm a Democrat, and defending more IRS agents. Geez, I mean, does someone tell Schumer that it's an election year?
Well, he calls it a poison pill, Jeannie. Which approach do you prefer?
The reality is that, again, if you cut the funding for the IRS agents, that'll be scored as cost-inducing, not cost-reducing. So anybody who is serious about cutting and who is serious about offsets would not suggest that the place to find those is cutting IRS agents. So yes, I agree. We need to do something about spending, and these supplementals are expensive. But why don't we go back and do something else, like visit the 2017 tax cuts that were given to those billionaires? Why don't we do something more effective to actually cutting as opposed to adding on, which is exactly what the Republicans are doing? I mean, this is confounding if you just think about the numbers. It will cost more to take those agents away. The money that the government gets comes solely from taxes. If they aren't able to collect, we don't get the money as a people and a government. We need it collected. We need IRS agents to do that. Defunding them in this way is not an effective way to do anything except score political points. So it's a political game that the new speaker and the Republican Party have decided to play, but not at all effective from any sort of cost-saving perspectives.
But this isn't about really reality, is it, Rick? This is about politics. You can win an election on defunding the IRS, on eliminating the IRS. I think that might be part of Ron DeSantis's platform.
We won't even get into how many supplementals and the billions and hundreds of billions of dollars that were passed when Democrats controlled the House of Representatives, and not any effort was made to cut federal spending to pay for them. So let's just put that out there as a comparison of the new administration of Mike Johnson, the speaker. Look, I mean, the reality is this is not enough money to make a dent in anybody's wallet in the federal government. And the message to taxpayers is pretty clear by Republicans, which is we're going to find pay-fors. And there's not a voter I know who's going to look underneath the spending patterns of the IRS and figure out that it costs you $1.10 for every dollar you cut out of the IRS. I mean, I get it. You know, good policy, bad politics.
Yeah, there it is. Rick Davis knows, and Jeannie Shanzano. That's why they're our signature panel, and they're up next with more in the aftermath, if we call it that, of this UAW auto workers strike, historic in size, but it might just be the beginning. We'll have more on that ahead after we check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Israeli diplomats at the UN are wearing Holocaust-era yellow stars. Gilad Erdan is the lead Israeli UN representative.
We will wear this star until you condemn the atrocities of Hamas and demand the immediate release of our hostages.
Erdogan likened the moment to the Holocaust when Nazis forced Jews to wear the yellow star as an identification badge. He says the stars are a reminder that Jews vowed to fight back to defend themselves. Palestine's foreign minister says it's the Palestinians who are being forcibly displaced and killed. FBI Director Christopher Wray says the terrorism threat in the U.S. has reached a whole nother level since the war between Israel and Hamas. He warned a Senate panel today the threat is not just from abroad.
Not just homegrown violent extremists inspired by a foreign terrorist organization, but also domestic violent extremists targeting Jewish or Muslim communities.
Again, that is FBI Director Christopher Wray. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Final trading day of the month of October. We got ourselves a Halloween treat right now. The Dow, the S&P, NASDAQ, all advancing. Best level of the day right now on the S&P 500 index. Has been a choppy day, but right now the S&P up by about 15 points. That is a gain now of 0.4%. Dow Jones Industrial Average advancing by 52 points, up 0.2%. The NASDAQ Composite Index is up 23. Higher also now by 0.2%. 10-year yield 4.85% right now on the 10-year, with the 2-year that's yielding 5.07%. Spot gold down $10 the ounce to $19.85 for the precious metal. A drop right now of 0.6%. While West Texas Intermediate crude now down 1.3%, 81.28 a barrel on WTI. Home prices set a new high in August after 7 straight months of gains. And with that story, here's Bloomberg's Vinny Del Giudice.
Cities reaching all-time highs in the CoreLogic Home Price Survey include New York, Boston, Miami, and Atlanta. The reason? A scarcity of listings. In many cases, current homeowners are reluctant to relocate and give up low mortgage rates. Current 30-year rates are closing in on 8%. Vinny Del Giudice, Bloomberg Radio.
JetBlue Airways shares are plunging after the carrier forecast a worse-than-expected loss this quarter, citing constraints on its operations from air traffic control limits to too many seats for sale across the industry. JetBlue right now down 11.4%. Other carriers, including United, American, Delta, and Southwest, are also trading lower, but JetBlue down the most by far, down 11.4%. Again, recapping, stocks are higher. S&P at the best level now, up 17, a gain right now of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Big victory lap from the UAW. President Shawn Fain fist bumping all three of the big three, or at least his own members. That massive, historic, in fact, strike against the big three automakers, Ford, GM, Stellantis, now seemingly over. The deals have not been ratified, but as we told you yesterday, tentative deals now officially struck with all three. The GM was the most recent yesterday. With the headline now on the terminal, UAW scores biggest wage hike this century in year of union wins. He's definitely feeling it. As I read the story from Bloomberg, workers getting record-breaking wage hikes thanks to strategic strikes and stunning contract wins. Of course, the most recent would be Shawn Fain's.
We not only secured a record contract, we have begun to turn the tide on the war on the American working class. And we truly are saving the American dream.
Saving the American dream, and as he said yesterday, rebuilding the American economy, noting that there's a lot more where this came from. The resolution of these strikes could be just the beginning of a much greater movement that we could argue began with UPS and the Teamsters several months ago. The actors are still at it in Hollywood. The Culinary Workers Union in Las Vegas could be ready to tip off, and there are others here, to the point where he's calling for a combined nationwide organized labor strike on May Day of 2028 when these contracts expire. Let's reassemble our panel for their take. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Was talking to Lael Brainerd last evening on balance of power, Jeannie, and my question was whether the administration had let the genie out of the bottle here. Because this, in fact, may be the tip of the iceberg on what could be many labor actions that coincide with an economic slowdown. What do you think?
I do think it's possible, but I don't think there is any question but that this strike, the way it looks like it is going to be resolved in these tentative agreements, is an enormous win for the workers. It's, I think, a good win for the auto industry as a whole, and it's surely a really, really good win for the president. He put a lot on the line going out there and standing on that line for as the first president to do that. He has made a lot of promises to labor. We don't see a lot of those numbers reflected in the polls for sure, but this is one of the many successes I think we're going to see the president point to. And of course, I think, let's give credit to Sean Fain, probably one of the most effective UAW leaders ever in the UAW's history, and one of the most notable new style labor leaders we've seen in this country for so long. He really has made his mark. And there's no question that as we see this trickle down, say to the EV companies and others, that impact might be expanded. So a good day all around if this works out the way we think these tentative agreements will work out.
So, Rick, you could argue that these deals, these wage increases specifically, would not be necessary without the increase in inflation that this administration has been trying to fight. But we just saw Joe Biden on an actual picket line, and we were told that that was a history-making moment and that this was victory for this administration. Could it bite back in the form of additional labor actions that could create economic interruptions in the midst of an election year?
Yeah, I don't think it's an accident that we've had these massive labor strikes during his presidency. He likes to tout the fact that he's the most pro-union president of all time. He, as you point out, actually went down to a picket line, but he's intervened in previous strikes, on the side of the unions. I mean, corporate America knows exactly what they're getting with Donald Trump, and so. Or with Joe Biden. But I was just going to say, what's interesting in the most recent Bloomberg Battleground States poll in 7 states that are going to matter in November is Donald Trump's picking up union support. He has the highest level of union support of any president or any Republican running for president in the last 2 decades. So whatever he's doing to support these unions isn't necessarily translating to strength on the ballot with union households. So, sure, there's going to be a battle royal going on related to unionization in America, courtesy of Joe Biden's presidency, and we'll see where it goes from here. But it doesn't seem to be that politically viable strategy.
What do you think of this, Jeannie? Do union members, rank and file, those who are actually walking picket lines, the UAW, vote Biden because he showed up and was on their side, or do they vote Trump because he showed up, albeit at a non-union shop, and felt their pain?
I think workers feel it's a win that both of the leading candidates are trying to vie for their support. I don't know where they end up in 24, but if I was advising Joe Biden, I would tell his team to do everything they can to get Sean Fain, the UAW, endorsement and to get Sean Fain working for them, because that is a guy who has an effective message that appeals to workers. And I think this is what's so exciting when you watch what he has been able to do so far, is that he has been able to reach workers in a way that we haven't seen other UAW leaders do in the past. Maybe it's because he's the first democratically elected. It's hard to tell, but it's certainly a lesson that the Biden campaign team can take, because the ability of the Biden team and Democrats as a whole, sadly, to tell the story about why their policies are in the best interest of these workers has been utterly shut out by Trump and the Republicans, who have done a much better job on that front. So kudos to them, but Democrats should take a lesson and try very hard to emulate Sean Fain's ability to make these cases, because he does it very well and he's done it effectively. 6 weeks this strike has taken. That's remarkable to imagine.
It is. Rick, we just have a minute left. Does he have a future in elected politics? Would you run Sean Fain as a Democrat?
Yeah, he's a dangerous guy. I agree with Jeannie. He's got very good capability to communicate. This concept of a standing strike I thought was brilliant. You can't argue with his results. And I just as soon he get out of union politics and get into national politics where we have a fair shot at him.
A fair shot. How about a future labor secretary in a second Biden term?
Nah, I'd have to leave that to Jeannie's judgment. Anything that gets him out of the union organizing business would be good for me.
What do you think? If it was Marty Walsh, why not Sean Fain, Jeannie?
I think it's a brilliant idea, Joe Matthew. I know hopefully Biden is listening. They make this move soon. It's a brilliant idea. He'd be remarkably...
He's got to wear the white camo golf shirts, though. You can't change the attire if you come to Washington, Sean Fain. I'm Joe Matthew with Rick and Jeannie. More ahead. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the stories that we're following for you at this hour, Tesla has convinced a jury that its autopilot technology was not responsible for a crash that killed a California driver 4 years ago, vindicating the driver assistance system that is a core part of Elon Musk's efforts to make his electric car company stand out from rivals. Jurors in state court in Riverside, California today sided with Tesla in the first lawsuit blaming a fatality on autopilot to go to trial. Caterpillar shares are trading lower as the machinery maker reported a decline in its order backlog, indicating customer demand may be waning in the months ahead. Caterpillar shares, they are trading lower now by 6.1%. Amgen raised its full-year revenue guidance after closing the purchase of rare disease drug maker Horizon Therapeutics. More from Steve Rappaport.
Charlie, Amgen says revenue will be $28 billion to $28.4 billion for 2023. That's up from the company's previous projection valuation that topped out at $27.4 billion. Adjusted earnings will be $18.20 to $18.80 a share, an increase of 40 cents at the bottom end of the range. Amgen said third quarter adjusted earnings were $4.96 a share, while analysts had estimated $4.68 a share. Analysts at Jefferies and Wells Fargo attribute the profit beat to lower expenses in the quarter. As part of its quarterly earnings report, Amgen disclosed it halted the development of an experimental prostate cancer treatment known as AMG 340 that was in the first stage of drug development. Charlie?
And that's Steve Rappaport reporting. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington. Thanks for joining us. We'll add Kaylee Lyons to the conversation coming up in just 5 minutes. Some final thoughts ahead as well from Rick and Jeannie, our signature panel, after we get an update on world and national news from Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Secretary of State Antony Blinken and Defense Secretary Lloyd Austin have been pushing for Congress to approve the Biden administration's $106 billion aid package to assist Israel and Ukraine and to address other security concerns. Secretary Austin says the funding will also help boost the U.S. economy.
When we send our friends munitions from our stockpiles, the money to replenish our supplies strengthens our military readiness, and we invest in American industry and American workers. That also holds true for funding for Israel or Ukraine to procure new equipment off the production line.
Tensions were high in the committee room as Austin and Blinken were testifying, with pro-Palestinian protesters calling for a ceasefire. FBI Director Christopher Wray is issuing a stern warning in light of the war in the Middle East. He spoke today before a Senate panel.
The terrorism threat has been elevated throughout 2023, but the ongoing war in the Middle East has raised the threat of an attack against Americans in the United States to a whole nother level.
Christopher Wray says terrorist organizations have renewed their calls to attack the U.S. and its interests, and he believes the most immediate concern is that violent extremists will draw inspiration from the conflict in the Middle East and then target Americans. New information from the Vatican archives confirms the Vatican and other Catholic Church institutions kept quiet about Nazi treatment of Jews because of an anti-Semitic Vatican aid and due to fears of provoking violence against the Vatican. According to the Wall Street Journal, the archives confirmed that the church did help Jews, but focused on Jews who were baptized Catholics. Dozens of scholars, including critics and defenders of the church, gathered in Rome earlier this month to discuss the significance of the recently opened archives. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe.
Right, Nancy, thank you. We've been dealing with some pretty important issues over the course of this hour. This is not one of them, but it's something that I have to ask about and acknowledge here because we've been looking at the images of Ron DeSantis's cowboy boots now for months. And there are very real questions about what's going on inside those boots. It was finally borne out in a podcast just yesterday, and the Florida governor was asked about it. If you don't know where I'm going here, look at Forbes. The headline is DeSantis wearing heels. Shoe experts say probably. I'll point you to Political Magazine. 3 expert shoemakers say Ron DeSantis is probably wearing height boosters. You see the cowboy boots? It looks like there's a heel inside the boot. And the toes are kind of flopping around, making people wonder if he's, wearing high heels. It did come to bear on the PBD podcast.
What are they? I don't even. I haven't seen that.
They've not shown this to you. Okay, What they're trying to say with this is that in your boots you have heels.
No.
That's what they're trying to say.
Those are just standard off the rack Lucchese.
How tall are you? How tall are you, Governor? How tall?
5'11".
5'11". Okay. Why don't you wear tennis shoes and dress shoes?
I do wear tennis shoes when I work out. Yeah, 100%.
You do?
Yep.
Okay.
It got more awkward from there. Rick Davis and Jeannie Shanzano weigh in on this. Rick, I've heard of, trying to make a candidate look taller. Is that what's going on here?
First of all, I think cowboy boots on presidential candidates is kind of a silly fashion thing. But if he wants to do that and look taller in the process, 5'11" is sort of an average height for, somebody. So my guess is it's much to about nothing.
What do you think, Jeannie? Keep wearing the heels or no?
You know, I think so, except if it's going to lead to conversations as awkward as that, I might be inclined to take them off. And listen, I love heels myself, but boy, that was awkward. I don't know if I would put myself through that again.
Yeah, I don't either. And I'm not a tall guy. Just not going to be wearing heels for you. Big thanks to Rick Davis and Jeannie Shanzano, our signature panel, with apologies to the shoemakers. Hour 2, Sound On, starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
The administration makes the case for funding Israel and Ukraine. Welcome to the fastest show in politics as the Biden administration presses lawmakers for more money. We'll be talking about here in hour 2 of Sound On, the Secretaries of State and Defense on Capitol Hill today. We'll talk more about it with Republican Senator Rick Scott, who's going to join us live from Capitol Hill with insights today from Alex Zerden of Capitol Peak Strategies, former policy advisor on the National Economic Council, as we try to follow the money in this story on both sides of the Atlantic. We've got a lot to talk about. Kaylee Lines joins us coming up next after a look at Wall Street. Charlie Pellet has the update on trading from New York. Hey, Charlie.
Well, hello there, Joe Matthew. Stocks higher across the board. Not just that, best level of the day. Traders are taking the latest economic data in stride. On the eve of the Federal Reserve decision, consumer confidence dropped to a 5-month low in October, while employment costs unexpectedly accelerated in the third quarter, underscoring a strong labor market that risks keeping inflation above the Fed's target. So here's where we stand again. Best level of the day at 41.88 on the S&P, up 21 points. That is a gain of 0.5%. Dow Jones Industrial Average up 92 points now, higher by 0.3%. Nasdaq up 45. That was a gain of 0.4%. 10-year yield 4.86%, with the 2-year right now 5.07%. Spot gold down 11.30 the ounce to 1984, drop there of 0.6%. And West Texas Intermediate crude down 1.3%, 81.25 a barrel on WTI. Federal Reserve policymakers have begun their 2-day meeting in Washington. The decision will come tomorrow. Troy Gajewski is chief market strategist at FS Investments.
Financial market conditions have tightened substantially, so they do have the room to sit back now and not be overly aggressive, and they're more than likely done. That being said, if inflation picks back up as it has recently, at least they have the flexibility to hike. Yeah. Until then, they're going to follow the data.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Fed decision, 2 p.m. Wall Street time tomorrow. The news conference with Fed Chair Jay Powell, 2:30 p.m. Yes, complete coverage and analysis here on Bloomberg Radio. JetBlue shares plunging after the carrier forecast a worse than expected loss this quarter. JetBlue now down by 11.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington, joined now by Kaylee Lines. Kaylee, it's great to see you as lawmakers come back into town and the real debate begins over the very topic that we have been talking about for a couple of weeks now when we were trying to get a speaker in place, and that is the supplemental funding request from the White House, which sounds really boring when people use jargon like that in Washington. Yeah. It's the many billions of dollars the president is asking for Israel, for Ukraine, and some other matters.
Many, many billions.
A lot of billions.
$105 billion.
It's a lot of money.
In fact, we're talking triple digits here. And as you say, there are multiple parts to this. Funding for Israel, for Ukraine, for Taiwan, even border security, trying to throw a little sweetener in there for Republicans. And yet doing it all as one big package is not something the House of Representatives, at the very least, seems very eager to do. We know they're working on a separate Israel bill, $14 billion in change of funding.
Yeah.
But there's an offset, Joe, and that's stripping money from the IRS.
Yeah, so we're going through this apparently every day with Mike Johnson. Now the speaker has to choose slightly different language every way to say the same thing. He's not bringing it all to the floor. It's going to be Israel only. The one thing that remains the same with all of these interviews is they're all on Fox. Here's the latest interview on Fox.
Schumer over there and have a very direct and thoughtful conversation about this. I understand their priority is to bulk up the IRS, but I think if you put this to the American people and they weigh the two needs, I think they're going to say standing with Israel and protecting the innocent over there is in our national interest and is a more immediate need than IRS agents.
IRS agents. So this is where things get interesting.
Yes.
We didn't really talk a lot about offsets yesterday, but this has everyone bunched up today in Washington, is that they want to take money from the IRS.
Yes.
That had been earmarked by the Biden administration. By the way, a woefully hated, if you want, but woefully underfunded agency. Like the phones don't work or anything. The copiers are out of ink, toner. Take that money, pay for Israel, and then we zero things out on Capitol Hill. Democrats don't like that idea at all.
Yeah, and I just wonder if the math really is zeroing out, because the IRS
this is the problem.
How you get the revenue.
Right.
So I wonder if net it becomes a not zero-sum game, but actually potentially a negative someone. And I feel like we should ask maybe an expert about that.
We have one. By the way, we're going to talk to Senator Rick Scott about this.
Yes.
I'm pretty sure I know where he's going to come down on this one.
Yeah.
But Alex Zerdin is with us. Capital Peak Strategies has spent a life doing this stuff, or at least a career. Alex, it's wonderful to see you. Thanks for being at the table here. I'm having trouble with the logic a little bit. Rick Davis was arguing for offsets. We get that. You want to spend billions of dollars. But to take money from the money-generating machine, money that's actually being counted on, I guess to Kaylee's point, might be counterintuitive.
That's right. And thank you, Joe and Kaylee, so much for having me.
Absolutely.
There's an idea here. You have to spend money to make money. And I think that's the example with resourcing the IRS. It has been chronically underfunded for quite a while. And so what we need to do, and what Congress passed and the president signed, was budget for IT modernization to get out those problems that you described. We're not on paper anymore. Unfortunately, the IRS is working in too many manual processes. They're having too many technical issues. And this was a glide path over a number of years to improve resources for the IRS, which is the largest independent bureau at the Treasury Department and is where the U.S. government collects tax revenue.
Okay, so if the IRS hypothetically had, say, $14 billion less to work with, what actually happens inside the IRS at that point? Or maybe a better question is what won't happen?
Yeah, they're arguing that it is more efficient for tax collection, that they are able to improve the ability for tax collection, so they're able to recoup more money and reduce leakage in tax inefficiencies, recover more money for the government, for money that people, companies, other entities owe to the government. They actually collect that money.
People talk about the IRS, and, we went through this whole thing with armed guards or armed agents knocking down your door last year, which was, of course, that did not turn out to be true or have anything to do with the $80 billion that the IRS needed. Can you imagine, just as a little bit of a tangent here, how awful it would be to work there? You're dealing with, like Windows 95 machines that don't turn on, and you're dealing with really horrible resources, and you're being asked to do pretty dry work here. These aren't people knocking down doors. They're actually processing your tax returns, which sounds like tedious labor, and we need somebody to do it, right?
Absolutely, and the people I've worked with when I was at Treasury and different parts of government, they are public servants, they are civil servants, not there for the money. They're there to help improve tax collection and improve public services for everyday Americans, for all 330 million plus Americans. And those are the people who I met. IRS does have a small component for law enforcement, IRS criminal investigations, and they do critical work. And they investigate cryptocurrency, tax evasion. They go after some of the worst criminal tax evaders. So it's a necessary function, but a small part of what the overall Bureau does.
Okay, so to bring this conversation full circle, as you talk about criminals, we also should talk about terrorists, or at least designated terrorists by the U.S., because ultimately this IRS conversation is tied to the Israel and Hamas conversation. We actually are just getting headlines out from the White House press briefing in which Admiral Kirby is the spokesperson for the NSC is talking. He says, no indication that Hamas has gotten any of the aid sent to Gaza. And this speaks to the difficulty in trying to get humanitarian aid in for innocent civilians while also not trying to contribute in any way to the designated terrorist organization and its activities. How hard is this kind of financing right now?
You exactly hit the nail on the head. This is a constant balance for imposing sanctions against foreign terrorist organizations like Hamas. Hamas has been designated since 1997 by the State Department, 2001 by Treasury, and yet they've been able to assemble this horrific militia, kill thousands of civilians, and murder innocents and take hostages, even with some of the most robust safeguards in the world to combat terrorism financing. Meanwhile, the people in Gaza are suffering, and so there's a need to balance strict counterterrorism financing measures, economic sanctions against Hamas, Palestinian Islamic Jihad, while ensuring that the safe, responsible delivery of aid and aid resources get to those in need. And this is a tension we've seen here in Gaza. We've seen it in Afghanistan, where I've worked in the past. We see it in many conflict zones around the world.
Well, so how do they move that money? How is that money delivered? We're sitting next to the crypto expert here, and I'm sure Kaylee has more informed questions than I'm going to ask. But to what extent do we think, and I've seen several reports about this, to what extent was crypto used in funding Hamas and this attack?
So we're seeing evidence that Hamas and other terrorist groups have raised money through crypto. It's not a significant amount of money relative to the other sources of funding, but according to Senator Loomis, I've also thought about this. There's no de minimis amount for allowing terrorism financing. Any amount, even $1, as Senator Loomis said, is unacceptable. And I take that position as well. Yeah. So these organizations have raised money, though, from Iran, and at least $60 to $100 million a year are the reported estimates from U.S. and Israeli sources. But Hamas controls territory in Gaza. They raise at least $300 to $400 million a year through taxation, through extortion, through other ways that they control physical territory. They control the ground, like ISIS, like other terrorist groups. So it's really unique in that respect. They were designated many years ago as a different type of insurgent organization, rogue terrorist organization. Now they govern, they control territory, they oppress people and tax and extort them.
Yeah, as Joe knows, I've been talking a lot about this over the course of the last several weeks, being surrounded always by conversation in the crypto space. And there was a Wall Street Journal article that a lot of senators latched onto that has been partially corrected. Yeah. A lot of pushback from the industry on the dollar figures really at play here when it comes to crypto specifically as a method of Hamas financing. But something else I hear from a lot of people in the crypto industry is that what's different about this is it is inherently traceable, because we're talking about transactions on a blockchain, and actually that should make it easier to go after these people or prevent this kind of financing versus, say, things that happen in fiat currencies like the US dollar. What do you say to that?
It's a bit of a mix. There are aspects of cryptocurrency transactions that are very transparent, that are on the open blockchain and publicly accessible. There are a number of transactions that occur, though, within exchanges or within more opaque sources of transactional platforms, and that makes it a lot harder to detect. Also, people are not necessarily saying they're transacting in the name of Hamas or I'm sending money to Hamas. Sure. And so you can be sending money openly in the open, but it may be obscuring the origins or destinations of those funds, which is classic money laundering and terrorism financing typologies.
So to what extent then can our Treasury, can the government interfere with monies going to Hamas?
So Treasury has taken a number of recent actions. They designated a new network of Hamas-related investments. They also designated the first crypto exchange in Gaza about 2 weeks ago as well. So Treasury is taking this incredibly seriously. But it's not just the U.S. alone. The U.S. strategy for combating terrorism financing globally and imposing sanctions is to work with partners. And so you've seen senior Treasury officials on the road in Europe, in Middle Eastern capitals as well, to create more of an international coalition, because most of this activity is not occurring in the U.S., but rather in countries in the Middle East, and fundraising, unfortunately, also occurring in Europe that's benefiting Hamas.
So if you had one recommendation, what should be done most easily or most immediately in terms of combating the financing of terrorism? I don't know if easy is a proper word to use here, because it might be very hard, but what would it be?
Yeah, never easy in this context, but I think shutting down loopholes, particularly in more compliant jurisdictions in Europe and the Middle East, to actually take Hamas terrorism financing more seriously as a legal and policy matter, those would be the first places to start, and we're seeing Treasury in the field doing that right now.
We're talking about money flows. It's kind of interesting on both sides of this. To what extent do you view this, based on your experience, as kind of a financial war here. I realize there's a hot war that's being fought in Gaza, but we're talking about monies, billions of dollars coming from all corners of the world here to influence the outcome of this, specifically in Israel, but we could talk about the same in Ukraine.
Absolutely. So the economic picture is part of the puzzle, but it is diplomatic, is military in nature. Sanctions are most effective when they are part of a broader policy goal and policy outcome to change behavior, not just on their own. They're never going to change the conflict on their own. Here, there have been sanctions against Hamas for the better part of 2 decades, and they've had some disruptive effects. Yeah. But Hamas is also able to import a large amount of military supplies from places like Iran. They're able to get diplomatic support from allies and partners of theirs in the region. And so the economic piece is important, but I don't think it's dispositive here, especially in the midst of an active conflict.
I'm glad you could come talk to us today. Alex Zerdin, Capital Peak Strategies, longtime advisor for the National Economic Council, bringing his experience from Treasury here to our table at Bloomberg. Thanks for the insights today, and come back and see us again. Fascinating conversation, Kaylee, as we bring things back to Capitol Hill now. So the Russell Rotunda and the senator from Florida, as we told you, standing by, Senator Rick Scott. It's great to see you, and thanks for coming back to talk to us on Bloomberg, Senator. I'd like to start with the matter of funding the war effort in Israel, something that we were just talking about here. And the Republican Speaker of the House, less than a week on the job, says he wants to bring this to the floor this week as a standalone measure, stripping it from funding for Ukraine, Taiwan, and the border as the White House has requested. Do you support that approach, or is there going to be a standoff here now with the Senate and the House?
I completely support what the Speaker is doing. They're totally different issues. I think there's unbelievable support for Israel, and we need to support Israel. And what Hamas has done there, beheading babies, burning babies, raping young girls and burning them, is just despicable. So absolutely we need to do it, and we need to do it as quickly as we can. With regard to Ukraine, I've supported Ukraine aid, but what we have to do is let's go back and let's look at where we are, how we're going to win, how the money is going to be spent. I think there's a lot of questions on Ukraine.
So on the Israel funding and your support of what Speaker Johnson is doing here, could you get more specific? Are you supportive of the idea of splitting that funding out from a wider supplemental package? Or are you also supportive of the idea of offsets being necessary, of taking more than $14 billion from the IRS in order to fund that aid for Israel?
Well, number one, I support separating it out. We should have done Israeli aid last week. So let's get that done right away. I think it's the right thing to do to start saying, how are we going to pay for these things? I'll support whatever the House wants to do. There's conversations about paying with it by reducing the number of new IRS agents, which I have not found one person in my state that's interested in another IRS agent. But there's other ways to do it. But I think it's important to continue to focus on fiscal responsibility, so I'm glad the Speaker is doing that. So I completely support the Speaker. And by the way, the only way this is going to pass is if the Republicans in the House pass it. So we need to support what the Speaker's trying to do if we want to get any Israeli aid done. Then separately, we can have the conversation about Ukraine, the border, Taiwan, things like that.
I know you're not a big fan of the IRS, Senator. I remember talking about that request for $80 billion for the agency over the last year. Is that the right way to pay for this?
Absolutely. I haven't found one person in this country that says they want to have more IRS agents. Maybe somebody's applying for a job they might want it, but no, that was a complete waste of money. But there's other wastes of money too. So I think as we look at whatever aid we're doing, we ought to say, how are we going to pay for this? We have $33+ trillion worth of debt. We have high inflation, high interest rates. We have to, wake up to this. We ought to wake up that we've got to get our fiscal house in order, and that's part of the way to do it.
You say whatever aid we're doing, Senator, and I just wonder, considering this is an emergency funding request, we don't typically see offsets for emergency funding requests, and I just wonder, are you worried about the precedent that may be set here? If one day we're talking about emergency funding not for a war that's happening abroad, but for, say, a humanitarian or natural disaster at home, like a hurricane in the state of Florida?
Well, first, I support Israeli aid. I do think the right thing to do is figure out a logical way to pay for these things, and whatever it is. I mean, that's what your federal government ought to be doing. We ought to prioritize just like you do with your family. You say to yourself, if I have an emergency, how am I going to pay for it? That's what we all do. Your federal government ought to be, your state governments, every government ought to be doing the exact same thing.
Well, Senator, I have to ask you about what you're hearing from the leadership here, namely Mitch McConnell, who's frankly sounding a lot like Chuck Schumer. And I'm not trying to start a fight here, but when it comes to tying Israel and Ukraine funding, here's what he said yesterday in Louisville. It's a quick remark, and we'll have you respond.
This is not just a test for Ukraine. It's a test for the United States and for the free world. And the path toward greater security for all of us is simple. Help Ukraine win the war.
I wonder if you agree with Mitch McConnell when it comes to Ukraine specifically and might in fact vote for a standalone Ukraine funding bill, but you said you had problems with that, and I'm wondering where we might be able to find common ground if it exists. Do you want to see an audit of Ukraine funding? Do you want a different measure of accountability? What are you telling Senator McConnell?
Well, first off, what the Biden administration has proposed is the fact that they want to tie Israeli aid to money for sanctuary cities. Well, we have sanctuary cities because we have an open border. So all these things are separate issues that we ought to be dealing with, and we ought to deal with them separately. Now, with regard to Ukraine, I want to know how the money has been spent. I want to look at how every dollar has been spent. That's what my voters are telling me. I've been supportive of lethal aid all along, but I want to know what the plan is to win. It looks like the Biden administration is planning just to have a long war, not to win. If we are going to help Ukraine, let's help Ukraine win.
So when you say let's help Ukraine win, and you want to know, ultimately you have some questions that you would like answered here. Do you worry that in the attempt to get those answers, or that the answers cannot be that specific because this is a war we're talking about and it's inherently unpredictable in nature?
Well, at least we ought to try. We ought to try to get the information. We ought to know exactly where the money has gone that we've spent. That shouldn't be hard to do. Otherwise, they've lost track of the money. We ought to know exactly what the Biden administration's plan to win is. That shouldn't be hard to do. Doesn't mean it might not change down the road as the war changes. But there's information. But this idea that we're just going to say, "Oh, we're doing this," and we're going to throw all this money at problems. I mean, that makes no sense to me. I mean, we need to be responsible with taxpayer money, and I plan. I've said that all along. But these are all different issues.
The argument from Leader McConnell, and for that matter, I guess Leader Schumer and President Biden, for that matter, is that they are intertwined. That was the word that Mitch McConnell used yesterday, that these are national security threats that have everything to do with each other. Are you starting to doubt that case, Senator, when it comes to Ukraine?
Well, first off, let's remember this. We have a Republican speaker in the House, and he has said he's going to do the Israeli aid independently. So whatever we want to do over here, all we're doing is if we try to do something that's a global solution, is we're undermining what our Republican speaker in the House does, and we're in the majority in the House. So what we ought to be doing is listen to them, take what they give us. If we want to make that better, let's do that. But let's go support a new Republican speaker in the House to get what he wants done, and we can still do Ukraine aid. Don't want to say we're never going to do Ukraine aid, but we've been talking about this for months, and nobody wants to give us the information so we can make an informed decision.
Okay, I understand what you're saying about the Republicans do have control of the House, but the fact is the Democrats do have control of the Senate. So not just on this issue, but also all of the funding battles to come, knowing we're facing down this deadline of November 17th. How hard do you think it is going to be able to reconcile the two chambers here and what they want to do?
Well, hopefully we'll be able to reconcile it. It takes 60 votes to pass something in the Senate, so it takes Republican support to get something done over here. And my belief is we ought to start by supporting the new Republican speaker in the House. So my goal is let's start passing appropriations bills. I don't know why we haven't done this before. I'm a business guy. You have a budget, you follow your budget, and you live within your means. We're not doing that up here. We don't even talk about that. We didn't even start talking about the budget until sometime in September, and the fiscal year ends September 30. That doesn't make any sense to me. And I've been up here 5 years. It's every year because the leadership here wants to do these gigantic omnibus that nobody knows what's in it, that we've never read.
I want to ask you about the new speaker. Senator, you were, of course, a member of the House. You know what it's like in a different culture than that of the Senate. Do you know Mike Johnson? And what comes from that whole exercise with Steve Scalise, Tom Emmer, Jim Jordan, I know that you've worked with all of them. That public display of chaos that some might say, although Tom Emmer said it was a great display of democracy. What did the Republican Party get for all that drama?
Oh, they got a great leader. Here's what they got. It's no different than why I ran against Mitch McConnell a year ago. I ran because I think we ought to work as a team. We ought to say, how do we as a team do the right things for the American public, to our voters? And I think that's exactly what happened in the House. They picked somebody that they think will be a great team leader, but everybody's going to have a voice, and that's exactly what they wanted. I had a great working relationship with Kevin McCarthy and Steve Scalise and Tom Emmer and Jim Jordan. They're wonderful people, but what the House wanted was somebody that felt more comfortable would give everybody a voice.
Senator, do you really think the Republican conference in the House is a team right now when there were 8 members who kicked out the former speaker and there's just a lot of disjointedness in general?
Well, first off, everybody ought to be representing their district, and everybody in the Senate ought to be representing their state. And we ought to find common ground, and it shouldn't be, there's Democrats should have the same positions I have because it's good for their state. The Republicans might not have the same position because they might think it's something's better for their state. That's how we ought to be governing ourselves up here. But absolutely, my experience with the House is they want to work as a team. If you look at what they did earlier this year, when a lot of people in the House had never voted for a debt ceiling deal, they voted for a debt ceiling deal that was going to make some structural changes. They were frustrated when that's not what ultimately passed, but that's what passed out of the House first. So absolutely, there's a team over in the House, and I look forward to working with them.
Senator, I have to ask you about what's happening on the campaign trail. Of course, your governor in Florida is running for the Republican nomination, and Ron DeSantis has been running into some issues on the campaign trail when it comes to polling, when it comes to fundraising, a campaign trail dominated clearly by Donald Trump. I wonder if you think it's time for the governor to come home and focus on business in Florida.
Well, I would never suggest that anybody get out of a race. I remember when I got into a primary back in 2010, everybody in D.C. told me to get out of the race, so I would never do that. But if you look at the polling numbers right now, Donald Trump has a commanding lead. It's very difficult to beat a prior president, somebody that when he left office, he can say we had a great economy, we had a secure border, we weren't at war. Some of the major issues we have now, he'd actually dealt with. So I think it's hard to beat Donald Trump, but if you want to run for any office, including president, you ought to go run and see how well you do.
Yeah, that's a very good point. And of course, there's a lot of other Republicans running for president at this point, though it does look like Donald Trump remains the front runner. What influence does Trump have, whether or not he retakes the Oval Office, remaining on the Republican Party in both the Senate and the House, do you think? How influential is he in those halls?
Well, I think all of us are trying to represent what we believe in and our voters. And I know that's my experience with President Trump and other Republicans, that's what they're doing. And so I think hopefully we all have some impact on what's going on out there. I do my best to try to represent, the 22 million people that live in Florida.
Senator Rick Scott, we appreciate the time, as always, sir. Come back and see us again soon on Bloomberg. Of course, the Republican from Florida joining us live from Capitol Hill here on the radio, on the satellite, and on YouTube. You can find us on YouTube right now. If you've got a little FOMO, search Bloomberg Global News. You could have been watching the senator in the Russell Rotunda that whole time, framed by the beautiful marble of Capitol Hill. Kaylee, interesting conversation with the senator. Everyone's being very careful. And when I say everyone, I mean establishment Republicans on Capitol Hill.
Yes, but he was pretty firm on he supports Mike Johnson and what he's trying to do in the House when it comes to Israel funding, both on the idea of treating it separately, but also the idea of offsetting it by pulling more than $14 billion in funding from the IRS. He seemed very supportive of the speaker in that regard.
But for sure, and maybe I should qualify that to say careful to overstep while he's establishing himself.
Right.
Nobody wants to say anything that might rattle the speaker or make things look like there was a problem selecting a speaker. Tom Emmer said it, the greatest ever moment in democracy.
Yeah.
I'm not sure that it'll go down as such, Kaylee. But as we talk about funding for Israel, for Ukraine, and so many other matters here, we're about to hear a conversation with the chairman of Pfizer, who is no stranger to government funding, and there have been a lot of questions about where this company is going post-pandemic and what a post-COVID Pfizer looks like. They just posted their earnings results earlier today.
Yeah, especially now that the government has really taken a step back in this. It used to be the government that was brokering the purchases of all of their vaccinations for COVID. Now that's gone entirely to the private market. And I think, Joe, largely what we're seeing is demand is just nowhere near what it was as we move to the later stages of this pandemic. So how do you take that technology that was developed and then move it forward into continued revenue streams in the pipeline? That's something that is a really critical question that Pfizer's dealing with right now.
Yeah, the stock has been hammered for these very same concerns, but we're talking about an American icon here. This is a company that's been doing pretty amazing things for a pretty long time, and we can't blame shareholders for asking what's next, especially when you look across the street at Eli Lilly and some of the others that are making the obesity drugs, although that's one thing I think David's going to talk to Mr. Bourla about. So this is an exclusive conversation you're not going to see or hear anywhere else. Kaylee and I will be back on the other side to talk more about it. Bloomberg Wall Street Week host David Weston sitting down with the chairman of Pfizer, chairman and CEO Albert Bourla. This is live on Bloomberg.
For our Bloomberg radio and TV audiences worldwide, I'm delighted to say that we are now joined by Dr. Albert Bourla. He is Pfizer chairman and CEO. So, Dr. Bourla, thank you so much for being here. Really appreciate it.
It's a great pleasure.
Earnings out today, they were a little softer than perhaps others, in part because of COVID. I mean, in some ways, you're a prisoner of your own success because you brought the vaccine out. Give us a sense of where we are on what comes for Pfizer after COVID.
Yeah, the earnings actually was quite good when it comes to the non-COVID products, as you said. We were growing 10%. And for the COVID, we had given the news 2 weeks ago. We made some important announcements that we rebased our COVID expectations, and also we took a lot of write-offs. So all of that came this quarter. So following the COVID era for Pfizer, I would call it the COVID crisis, because still COVID, I think, will be around and will be a significant part of our revenues, but will not be the epicenter of everything we do. I think the epicenter moves to the acquisition of Seagen, so moves to cancer. We are putting a lot of capital over there, and we are hoping that we will be able to make a big difference on cancer, as we did with COVID. It's coming through our 19 new launches that we are expected to have, and actually 18 of them already are happening right now, which will propel the growth of the company as we are moving ahead. And of course, the vaccines is a crown jewel. We'll continue bringing products.
So as you say, we're going to get to the other non-COVID issues, but before that, you said COVID's still around. I just got my shot 2 weeks ago. It was a Pfizer shot. But where are you right now in the uptake of the vaccine this time? Because ironically, a lot of us are getting sort of a little inured to the dangers of COVID. What are you anticipating in terms of vaccination rates?
Right now in the US, we were anticipating before, in the beginning of the year, around 24% of Americans will take a COVID shot. Right now, it's trending towards 17%. But of course, we need to wait until the end of the year to see. If you take into consideration from January until now, maybe 7.5% to 8% of Americans have received a shot. And then we are expecting this month to be very important right now.
What about follow-ons on mRNA? I know that originally, I think that you were working with BioNTech on flu mRNA. Where are you in that process?
We presented today in our earnings results from our COVID flu, and also we published 2 weeks ago. We have a COVID flu combination vaccine that passed all the tests in phase 2, so it's ready to move to phase 3. That gives us high confidence that will be with us in the period of 25. We also presented for the first time today data for a single flu, which is again mRNA, where it is the first time that the mRNA flu vaccine demonstrated non-inferiority and superiority against the standard of care. So we are moving very rapidly in creating combinations with COVID. I saw before that 17% of people are getting COVID, but 48% of people are getting flu. So I think that if you have a flu-COVID combination, that it is given at the same cost, because it's going to be zero copay, with the convenience of one injection, that will move the number of people that are getting COVID to higher levels.
Where are we in that process? I mean, I got 2 shots. I got a flu shot and I got a COVID shot at the same time. How far are we away from having 1 shot?
I think in 25 we will have it. Of course, if science keeps proving that we are right. But our timelines, it is in the flu season of 25, we'll have a combination vaccine.
So let's talk about the non-COVID, the other part of it that you talked about that did show growth, organic growth in your earnings.
10%.
10%. Sorry, don't mean to sell you short. 10%. There you go.
It's an impressive, and they are very proud.
That's right. When you look at those products that are coming online, how many of those are grown internally, and how many of those are through acquisition?
There are from the 19 launches that we are expecting, 18 are happening this year. We expect 4 from the outside, 14 from the inside. Some examples of the inside things that came from our own pipeline is the RSV vaccine. This was a significant beat for the earnings. Everybody, including us, were surprised how much people demand exists for this vaccine. We had the pneumococcal vaccine that also was a very big beat. Again, we were surprised how quickly we are taking back the share from a previous vaccine that had displaced us for a few months only. We are having immunoinflammation assets. We're having 3 or 4 oncology cancer assets with the first product that we launched against lymphoma. So it's a variety of products. Now, from the outside, very good example, Nurtec. It's a great product. It's for migraines. In October, we had the highest ever week with the highest scripts ever. Right now, more than 70,000 physicians in the US are prescribing Nurtec.
What about sickle cell?
Sickle cell is
doing as well, as I recall.
That's the second one, and the sickle cell, not only the one that we have is doing very well, but also we are progressing a second generation that will be way more efficient if again the science is in our favor, because those patients are really suffering, the sickle cell disease patients.
You mentioned Seagen, that acquisition. As I understand, it's been approved by the European Union, but not yet by the United States. Where are you in that process?
We are now, the last step that remains is the US clearance. As you said, 2 weeks ago, we got unconditional clearance from the European Union, where they saw no overlap and no need for any further action. We are now discussing with the US FTC. We are very collaborative with our discussion with them, and still we expect that the deal will close before the end of the year or early next year.
And if, in fact, it does close, as you say, what will that mean for your income statement?
Oh, it will mean, first of all, that we are getting a significant pipeline products that we need to invest. It's not that it's coming free, and we will continue investing on that. But it's coming with 4 already registered products that this year they are in the 2.3, 2.4, I don't know, what the analysts are expecting, and it's growing exponentially. So it's going to be, we expect that Seagen will give us $10 billion of revenues by year 2030.
Are you still in the market for more acquisitions?
Oh, yes. But of course, right now, this is a very big one. And already we have done a few before that. So we want to consolidate right now and integrate the 2 organizations very successfully. So I expect 24 that is not going to be a major M&A activity from our side. It's going to be, but not a major M&A, because we want first to consolidate that, start deleveraging a little bit, and then, of course, we have way until we make 25 billion of revenues by year 2030.
Well, and let me get to the overall numbers, because you've been very open about the fact you have some patents coming up, and so you have to replace that. I don't know what the number was. I think I heard 17 billion?
17, and I think maybe 16 now.
16? Well, that's what I was going to ask. How far are you to filling that $17 billion hole?
Well, the acquisitions that we have done so far are giving us 20 billion revenues by year 2030. So we're going to lose 16 likely, and we are going to replace with 20 by year 2030. And that's only for the acquisitions that we did. Now we are launching 18 products. This year, I think, should be the 18th. We estimate that they will give another 20 billions. That will be basically the growth. And of course, on top of that are all the pipeline assets.
One of the very hot topics, as you know, is weight loss drugs right now.
It is.
Led by Novo Nordisk and Ozempic, things like that.
Yes.
You have had some products that you've been pursuing. I think one you had to drop out in trial.
Correct.
You have at least one more, maybe 2 more in process. Give us an update on where Pfizer is in developing a rival for Ozempic.
Yeah. First of all, we need to understand that those products are injectable, the Ozempic and the product of Eli Lilly. Very, very good product. What we are working is oral presentation of these products. We have one, which is Danio, that it is progressing right now, is in phase 2, and we expect to have readouts by the end of the year. And today, we announced, we put in our website so people saw it, that we have another molecule that we brought into the clinic, which is a follow-on molecule to that. So we are waiting to see the results. It's all about data. Data will speak. If the data are good, we are going to move into phase 3.
If you have an oral version and you take it through trials successfully, how many doses a day?
Right now, the current pill it is twice a day, but we have working in reformulating that. And we feel confident that if it moves, we will be able to do it in once a day.
And will that be as effective in your judgment, in all likelihood, as Ozempic, for example?
We need to see the data.
Fair enough. When you talk about this, I think back in January, you said that you thought it could be a source of as much as $10 billion in revenue for Pfizer, maybe something like 10% of an overall market. I think we're roughly the numbers. Are you still on track for that? Do you still anticipate perhaps $10 billion in success?
Yeah. When we made this projection, we thought that the market would be 90 billion altogether, of which 1/3, 30, will be the orals. Right now, the market looks like it will be even bigger. So yes, it is a sizable opportunity if you have an oral anti-obesity drug.
And again, what's the timing of this? By the end of the year, you think you'll have results on the...
By the end of the year, we'll have results.
On Danu?
Yeah.
Yeah, fascinating. Let's talk about the overall economics of Pfizer these days. Obviously, you had a huge success, for all of us, by the way, in your vaccine. Is that sort of a one-off? How do you regard that in the longer term for Pfizer? Do you sort of think that was a sugar rush? We can't replicate that, so we got to go back to where we were 2019?
No, I think it is not a one-off, and it was not one, it was twice, right? So it was one vaccine and one treatment, and what are the odds that it is by chance that the same company is developing two medicines that fast during the pandemic? I think it's a demonstration of the significant scientific capabilities that the company is having. So those capabilities are going to be used in developing medicines for other unmet medical needs. And they refer to cancer, but there are other vaccines that they need to be developed. We are having problems with immunocompromised people. We have problems with people that they have very overacting immune systems. We have metabolic diseases. Obesity is one of them. We have anti-infectives that we are working. So there are a lot of therapeutic areas that we are working right now.
What about the mRNA approach itself? Because that came as many, to us, a surprise. Mm-hmm. We hadn't had a vaccine based on mRNA before you and BioNTech developed that. Are there further applications of mRNA that you're working on right now that you think are particularly hopeful?
Oh, yes. We presented today data from our flu mRNA vaccine, which particularly the flu with COVID combination, which was very successful. And also, we demonstrated that we had the first ever mRNA flu vaccine that achieved non-inferiority and superiority against the standard of care, the normal flu. So that's one of the examples. We are working on a single-dose vaccine with mRNA. So the mRNA technology will continue, but Pfizer is mastering multiple technologies. Our RSV, for example, was not mRNA vaccine, was a protein vaccine. Then our pneumococcal was not an mRNA or protein, it was a conjugate vaccine. So we are using the technologies so that we can pick the right one for the right bug.
Dr. Bourla, one of the things that you've been proud of is the investment that Pfizer's made in basic R&D, which puts you in a position, I think it's fair to say, to develop the vaccine that we all have benefited from. Where are you right now in how you're investing in R&D as opposed to other things? I know that you're going through some cost cutting. You've announced some cost cutting this year and going into next year.
Oh, yes, but still, even with cost cutting in the R&D, I think our R&D will remain one of the highest R&D investments in the industry. And you're right, when I took over, our research was around $7 billion a year. Right now, in the guidance that we gave is around 12 plus. So it's significant uplift. But also keep in mind that when I took over in 2019, Pfizer, the pharmaceutical revenues, we were number 4 in the world. Now we are number 1. Even after we reduced our COVID expectations, we will end up the year with the number 1 pharmaceutical company in terms of revenue. So from 4 to 1, that happens because we are investing.
We're speaking with Dr. Albert Bourla. He's chairman and CEO of Pfizer. So, Dr. Bourla, on this question of how you allocate capital, from the C-suite, as it were. You're going to be cutting some R&D, as I understand it. They're not immune from cuts that's coming up. How do you go through the process of saying, this we can afford to cut, we can retrench on R&D, this we can't? In part, let's be honest, so that we're prepared for the next healthcare crisis. There's going to be one at some point.
Yeah. We are going to have, as you said, cost realignment across the industries, across the corporations. So it's going to affect everything, including R&D. So how we do that, it is we are working on plans, how to reduce and realign our cost in the last several months. I had somehow telegraphed the street even of the second quarter earnings when I said that we are watching our COVID revenues, and if the COVID revenues are coming less than what we expect, we will realign our cost base, so to make it more appropriate. So this is what we are going to do. But of course, we do it with trying to maximize all the projects that are extremely important. And the important programs financially are usually, if not all the times, the important programs from medical need. Our products sell because someone needs them. If not, they will not. So we are trying to make sure that all of these projects will continue, and we are very confident that we will be able to make it.
I wonder what you've learned from your experience with COVID, and particularly in general what you've learned, but specifically in working with the government. What the government can do well, what it doesn't do quite as well. What's the relationship there? What could we improve in our healthcare system together?
Look, we work with many, many governments, and the vast majority of them, we develop very cordial relations because it was a crisis, they were counting on us, and we were delivering, so that we were able to develop really, really very good relations. That applies to the government of the U.S. Clearly, they have their own realities, so they are going back to what they have to deal, all the governments, which is their financial, fiscal, let's say, containment. And they have a tendency to forget that once upon a time, we saved the world, this industry. So it's not about Pfizer, I think it's about the pharmaceutical industry. I think this industry demonstrated the value that brings to society.
Are you speaking with the government, federal government of the United States, but more broadly, about things like public health? Because as I recall, one of the issues was not just getting a vaccine, but getting it distributed. Yeah. And that was not easy, particularly in a lot of parts of the world, but even here in the United States, a lot of people didn't have their own general practitioners that they could go to get the vaccine. Are we making progress in that? Are you talking with them? Is the federal government open to the possibility of more investment in public health?
In public health, we are talking a lot with the governments, particularly in topics that they think we can contribute with our knowledge. And COVID clearly was one of them. And because of the importance of the issue, that hit the highest levels of the government and also the highest levels of the company. So yes, I had numerous discussions both with the White House and the HHS of how we can improve situation for American public health.
Do you think that we're in a better position today to deal with the next pandemic or whatever it is? I mean, I'm not wishing that we have one, but we can't rule out that possibility. Are we in a better position, given our experience at this point, with Pfizer, with the government, with others, are we in a better position to deal with it than we were come 2019?
To answer the question, we need to think what really made the difference. And what really made the difference in this pandemic was the power of science. So as long as we maintain a very vibrant biotech, pharmaceuticals ecosystem together with academia in this country, I think in the next pandemic, still solutions will come from this country and will come from this industry. If not, I'm afraid solutions will come from other countries, and I think China is the one that is a rising star in terms of investing in science right now.
Well, what about that? Because you mentioned a very substantial amount of money that you've increased in investing at Pfizer and R&D. What about government funds, whether it's through academia, whether it's NIH, otherwise? Are we investing enough? Should we be rethinking how much we're investing in basic science in this country to deal with problems like this?
I think our biggest problem is not how much we invest, because the industry is increasing the investments, and I think also the academia is well funded right now, and NIH I think is well funded. I'm sure they want more, but they are well funded, like all of us. I think the issue is more policies that will enable investments in smaller biotech companies, that usually 99% of them will fail, but the 1% will be successful, will provide the solutions to the world in collaboration with us. So I think it's extremely important to have policies that enhance innovation, and investments is not going to be a problem.
Dr. Borla,
and not from taxpayers' money, from private money.
Dr. Roy, we're all very mindful what's going on around the world right now, whether it's Ukraine or whether it's Israel, and the war with Hamas, things like that, that affect all of us, including our businesses. Give us a sense, as a leader of a major corporation, how you deal with things like that, particularly given your background, which is a particularly distinctive background. I always like to talk about you and your counterpart at BioNTech from very different backgrounds. Overcame all sorts of differences, geographical differences, religious differences. How do you deal with that in Pfizer?
Look, clearly, as all, we are very worried when we have these conflicts, and the first thing that we are thinking is our people in these countries. And of course, also, we are interested because we are affecting the whole world. Now, particularly with me and the crisis in Israel is also very personal, because I'm son of a Holocaust survivor, and the scenes that I saw happening with October 7th, with this attack, reminded me what my mother used to tell me of how she was treated, and how her brothers were taken, how she saw kids being killed in front of the parents, and then kill the parents because they had to see it. Things that are unthinkable. I never thought that I would see them live through the discussions and what my mom was telling me. I saw it, so I was personally very much affected.
Is it possible to separate those sorts of memories, those sorts of feelings entirely from the business side? And I don't mean just for you personally, Albert Bourla, but you have a lot of employees who are feeling a lot of those versions of those feelings themselves.
Yes, and I think it's one thing to be the head of a corporation, and I need to do the right thing as a head of the corporation. I also am a human being, and I feel I have my own feelings.
Okay, Dr. Bourla, thank you so much for being with us. Really appreciate it. That is Dr. Albert Bourla. He's Pfizer Chairman and CEO. Back to you.
All right, David.
Big thanks to David Weston in New York for a great conversation. I'm Joe Matthew in Washington alongside Kaylee Lines. This is Bloomberg Sound On. And we're going to get back to the conversation about what's happening on Capitol Hill and the new Speaker of the House with Nathan Dean coming up next after we update Wall Street trading. Let's see what's happening on the markets with Charlie Pellet. Hey, Charlie.
Oh, well, hello there, Joe Matthew. Higher across the board right now, just about the best level for the Dow, the S&P, and NASDAQ. We just heard from Pfizer CEO Albert Bourla here on Bloomberg, a live interview. Pfizer shares after earnings this morning down now by 0.7%. Wall Street's jittery month is ending with the dollar climbing as the yen sank toward a 33-year low. S&P right now up 23 points, a gain of 0.5%. The Dow higher by 104 points, up 0.3%. NASDAQ up 49, that is a gain of 0.4%. 10-year yield 4.87%, with the 2-year right now 5.06% on the 10-year. Gold down $12 the ounce to $19.84, down by about 0.6%. West Texas Intermediate crude down 1.4%, $81.14 a barrel. AMD, Advanced Micro Devices, among the names reporting after the close of trading today. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we thank you. I'm Joe Matthew in Washington. Thanks for being with us on the fastest show in politics. Joe Matthew here with Kaylee Lines. I haven't even had a chance to say Happy Halloween yet.
Yeah.
It's just been all business so far
Same
today.
to you.
Happy Halloween. You actually wore orange. Can I describe that as orange? It's more of a...
It's like a rust.
A rust, fine.
Well...
It seems Halloween.
Yeah.
As opposed to me, I've got nothing. Well played on a subconscious level, I guess. I know that you did a big costume party. What are you going to be tending the door tonight? Like, do you do the
I don't know if we'll get
trick or treat? Nobody's knocking on the door. Okay.
Yeah, the apartment building.
I'm sort of girding for this whole thing with what will be they'll be trucked into the neighborhoods. And I'm fine with that. When the little ones and the cute ones, I'll work that door. It's later, after the lights start to go out, when you get like the deep voices, when it's the 16 to 18-year-olds showing up without costumes. Well, yeah, or I don't know. I'm just not sure why you're at my door right now. But I'll tell you something. Nathan Dean, dad to us here on the program, I'm going to say two things. Number one, he definitely works the door. He's out there greeting people all night, right? He's not inside watching TV. He's at the door. And yes, I'm going to say full-size candy bars for Nathan Dean. Am I right, Nathan? You're already setting things up, aren't you?
I can't set a reputation, I got to keep it real. So we just do the small stuff in my house.
Fun size. Okay. All right. We've established that. Happy Halloween here. We've been talking through the balance of the program about the challenges potentially facing the new Speaker of the House when it comes to funding Israel here. He's going to bring a bill to the floor on Thursday, and he might be in his first big effort here on the job at odds with Mitch McConnell, the White House, and Chuck Schumer. You're talking about some other things at Bloomberg Intelligence, though, as we address the new speaker at last here. What do we expect the next couple of weeks from Mike Johnson?
So, I mean, there's going to be a lot of political hiccups. I mean, we've already seen that with the Israeli aid package, you know, the talk about adding IRS to any type of funding bill and so forth. It's a non-starter with the Democrats in the Senate. But we anticipated these political hiccups. I mean, they have to happen. But, you know, come November 17th, we have a funding bill that needs to pass. Most likely it will be a continuing resolution. And there are enough people that want to see this Israeli aid go forward that I think it can eventually just, you know, it will have to go through this process. The real bigger concern is Ukraine aid. I mean, if they do it separately, then, you know, the odds of that going down, you know, there are greater odds of that decreasing. But ultimately, what we're telling our clients right now is that if you're concerned about a government shutdown come November 17th, we think the odds of that are fairly low. We're giving it around a 30% chance. The reason being is despite all this talk from the speaker that you hear on Fox News and all this other stuff about things that he wants to do, we think that ultimately his plan to kick the can down to January 15th requires some flexibility, and we think the party will give him that flexibility. Nobody wants a real fight before the holidays. They would much rather come back in January. So I think the markets can take a little bit of a breather. That I don't think there's going to be that much uncertainty at the end of the year.
Okay, sure. But then when we come back in January, then what? We were just talking to Senator Rick Scott from Florida, and I asked him, how hard is it going to be to reconcile what the Senate wants and what the House wants in terms of appropriations? And he just kind of said, I hope we can reconcile it. But hope is not a strategy, is it, Nathan?
No, it's not. And there should be said that there's other things towards the end of the year that we need to address, like the Farm Bill. You know, if the Farm Bill doesn't get reauthorized, you know, SNAP benefits is going to remain as a program, but they need to be appropriated. And they usually get about a month in terms of additional leeway. So if that doesn't happen, you know, SNAP benefits, food stamps are going to begin to run out. Ultimately, though, these things require bipartisan solutions. The question is, what is the political pain or the political process you have to go through to get to that bipartisan solution? So in this case with Speaker Johnson, you know, he may have to shut the government down if the politics says that's the case. But how long is that government shutdown going to be for? Probably not going to be 35 days like it was under the Trump administration. So if you're looking at a 1 to 2 week shutdown, then, you know, again, things can eventually get worked out. It's just this process that you have to go through. And, you know, I know I said that you could probably go towards the end of this year in terms of uncertainty for markets, but come January, that uncertainty is just going right back up because this is going to continue and continue until they eventually kick the can beyond the elections.
This is why Nathan Dean's phone keeps ringing here in the Bureau. Did you write this headline on the Safer Banking Act on the terminal?
Yes, it was sort of a buzzkill type of thing. I mean, what we're trying to say here is...
no, but I mean, this is poetry, though. Hang on a second. New speaker may be pot bank bill buzzkill. Come on, you got to put that up for an award or something.
Well, you know, what we're trying to say to our clients there is, look, we were optimistic that the Safer Banking Act could pass under Speaker McCarthy. You know, it had gotten past the Senate Banking Committee. That's a big hurdle. Could potentially even get past the Senate, an even bigger hurdle. And if you asked a Washingtonian watcher, is it easier to get it past the House or the Senate? They would always say the Senate. The problem is that Speaker Johnson has given no indication whatsoever that he's in favor of this. He's been opposed to it on multiple occurrences, including opposed to marijuana reform. And so we're going back down to low odds of this thing passing until we see any ounce of evidence that they're going to be okay with it. Because until then, I just don't see anybody pushing this thing in the House.
I think he should take the compliment on the headline.
Yeah. Is there like a contest for best headlines on the terminal?
Actually,
because
that's
we should
a great
enter.
idea.
Yeah.
Like
we try and get music lyrics in there all the time. So
amazing.
Very good. All right, Nathan, thanks for spending time with us. Good luck with the trick-or-treaters later. Are you dressing up? Should I have asked you?
I'm going as Where's Waldo?
Oh.
Where's Waldo?
Excellent.
Of course, he had an answer to that. He is the senior U.S. policy analyst at Bloomberg Intelligence, the great Nathan Dean. Dad will be looking out for the neighborhood tonight. You know that's the house to hit, right? I'm onto something there.
But not full-size candy bars.
No, he's into the fun size.
Fun size.
Yeah. Did you have the full-size candy bars at home as a kid, or what?
No,
You
but
seem
you
to be
always
comfortable
sought
with
out
this
the
idea.
houses
They're very
that
rare.
you knew had full. You avoided the apples houses because there were a few of those people who gave out fruit on Halloween, which I have strong opinions about. But then you also know where the full-size candy bars were, and everybody went to those houses first.
Is Nathan
It was a
still there?
targeted
I
strategy.
think I see him. Are we? Can we bring Nathan? You're not giving out fruit tonight, are you?
Peanut
Oh, I
butter,
think we lost
Starburst,
him.
and
Oh, no, there
I've
we
heard
go.
that all the third graders want Starbucks gift cards, but we're not doing that.
No.
Wow.
Either that or it's phone cards or something. All right. Thank you again, Nathan. Thanks for hanging out with us here. I guess I'll be stationed at the door tonight. I'm turning the light off, though, what is the right time? Is it 8 o'clock?
Yeah.
We're good. We both reached for 8. I would say
Yes.
that's when the lights
Seems
are going
appropriate.
out tonight, 8 o'clock. At that point, you put the whole big bowl out, and the next
Say,
kid's
take
the
one.
luckiest one in the neighborhood. I don't even try to fake that at all.
Are you dressing up, Joe?
I have no plans to dress up tonight other than being the guy at the door.
Okay.
But I'm sure I'll take lots of pictures of little kids because I'm not going out. You know, you can dress up at home.
Okay.
Dress up like a news
I
anchor.
have a few ideas for you. We'll talk about it in the
Oh,
commercial
please
break.
do. Geez, we should have saved time for this. I need a lot of help, you know. All right, thanks to Nathan Dean, to Senator Rick Scott, and to Alex for coming in to talk with us this hour. Alex Zerden on Hour 2 of Bloomberg Sound On. Kaylee, I'll meet you back on Bloomberg TV for Balance of Power. That's at 5 p.m. Washington time. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
And a very happy Halloween, everyone. It is, it is Tuesday, October 31st, 2023. Welcome to Bloomberg Business Week, live at our Bloomberg Interactive Brokers studio on YouTube and, of course, Bloomberg Originals. Tim is out. He's trick-or-treating. So lucky for us, we've just met him in the house. He's out and about.
I just want to see pictures of his two kids. Hopefully he'll post them on Twitter because they're adorable and
They are cute.
little outfits. So hopefully we'll get those coming.
Yeah, maybe there's a whole team, like family effort. So looking forward to that. Having said that, if you look at the markets today, it's not going to come as a surprise to anyone that we've got a Fed meeting tomorrow, because I feel like traders, for the most part, just today, taking economic news, some of the earnings news, all in stride. They're just waiting for Jay Powell and company.
And then also the last trading day of the month of a 3-month stretch that has been pretty brutal. And
Window
also
dressing, don't
following-
say it, don't
right,
say it.
exactly, the magic words. But also heading into November, historically the best month of the year, Carol.
Yeah, I wonder if this time will be different. We've heard that before. Hey, lots going on. So coming up, we are going to talk about the FOMC, and I'm really interested in kind of the stats in the playbook that just will be top of mind as Jay Powell and the FOMC members sit down to make that decision. No decisions expected. We're expecting rates to stay, but the color commentary will be very, very important.
Plus, we're also going to look at a bunch of stocks that are definitely in mind
Yes.
today. So, as shares of JetBlue and Caterpillar have been tanking following those earnings. But speaking of tanking, also Tesla, of course.
Gosh, right?
And even though it's up slightly higher today, actually about 2%, still the last couple of weeks has been pretty brutal, while Stellantis kicks into high gear following its latest financial
I think there was
update.
a court ruling in their favor, but nonetheless, right, the trend line has not been a good one. We're also going to talk about, well, how about a new civic architecture for the digital world? There is a lot going on in terms of privacy and what generative AI might do to all of us going forward. The good, the bad, the ugly, if you will. Martina Larkin is CEO at the nonprofit Project Liberty. She will have some ideas. She's working with the European Commission. She's also worked with the World Economic Forum, so curious to see what she has to say. And then we're going to get into the ravaged Florida town, Jess, that has become a magnet for risk-taking homebuyers. It's our Bloomberg Big Take today. Climate-driven gentrification. I'm obsessed with this description and terminology.
It's going to be a great segment. And then finally, how Hollywood has perfected the lucrative business of horror movies, Carol.
Ooh, Scary, cue
Perfect
scary
day.
noise. Juan, where are you? We need scary noise. All right, everybody, we're going to get into that in just a moment. First up, though, back to the markets and countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is a countdown to the close. Scarlett Fu and Katie Greifeld here with you, joined now by our colleagues Carol Masser and Jess Menton. And of course, welcome to all of our Bloomberg audiences across television, radio, YouTube, and originals. Happy Halloween, guys.
Jess, we had the same idea this morning.
Orange. Perfect day.
We're not festive, Carol.
I know, that's okay. We're, you know,
That's why you guys are on the end.
This is like our kids are older at this point.
Although we did go get some candy upstairs because they are doing some trick-or-treating Halloween candy grab bags upstairs.
All right, well, trick-or-treating, there's a little bit of, I feel like, something for everyone. U.S. consumer confidence dropping to a 5-month low. People are concerned about higher inflation. They're also concerned about kind of business conditions. I bet, you're really seeing that in some of the smaller business area. Having said that, we also saw U.S. employment costs continuing to go up, which just is another reminder of the tight and strong labor market. But I feel like markets are saying, I don't really care. And maybe what they really care about is Kim Kardashian signing a deal with the NBA.
Took the words out of my mouth, Carol.
Is there like a function on the Bloomberg Underwear Go? She signed a deal with the NBA. She's going to be their official underwear partner. They just, by the way, Skims just released their first ever men's collection last week, but she's going to be doing it for the NBA, the WNBA, and USA Basketball. So, yeah, and there is, who is that?
That's a basketball player.
Shea Gildish?
Yeah.
Did I say it right?
Let's just go with the NBA player.
He's an NBA All-Star.
Yeah.
Did I say it right, Ori? I don't know if I said it right. Anyway.
It's a pretty incredible story since Skims was founded in 2019. It feels like it's been around for a lot longer than that, and it became an establishment brand really quickly.
$4 billion worth, right, Jess?
Definitely. And then also the shapewear, obviously looking at this type of brand, and its first ever men's collection that was revealed last week makes me kind of wonder, I mean, Romaine's not here today, but would he potentially be interested in that or not? We'll have
Does
to
he
see
have
what he
Skims
says.
for him? We'll ask him when he's back. But it's quite a way to make a splash. I mean, you come out with your men's collection, your first one ever. Obviously, Skims is known for women. Partnering with the NBA is quite a way to get some attention there. So there you go.
There you go. It is Halloween, and our other story that we're focused on here is how Hollywood, despite the strikes that are happening there, has rediscovered the joys and the money-making potential of horror movies. Have you guys seen any of these movies that have come out this year?
I actually haven't.
No.
Okay, so clearly it's not making a hit with us.
It's not our audience.
Sorry,
but,
guys.
Anybody seen Barbie? Yeah.
We saw Barbie. I don't think Barbie is quite a Halloween movie, but apparently more than 75 million tickets sold, 46 films released, and $798 million grossed domestically in 2023 from horror movies. It's Hollywood's most reliable moneymaker, which is really interesting because I feel like a lot of these movies are just so cheesy, but I guess they are festive.
They're cheesy and they're also cheap to make. I'm kind of obsessed with Jason Blum of Blumhouse Productions. He recently went on Shark Tank and I was kind of I was kind of obsessed. Anyway, but his initial movie, right, Paranormal Activity, I think it was something like $15,000 to make, and I'm just looking at the numbers.
I did see that in theaters.
194 million in theaters after its
Amazing.
release, and then I guess you got 7 pictures. The franchise continued. They've grossed more than $890 million at the box office. It's a lot of money.
It makes sense because I feel like
Nice
the
margin.
worse quality footage it's on, the scarier it is, you know?
Remember the Blair Witch Project? Wasn't that done on someone's
that's exactly what I
camcorder?
was thinking of. Yeah.
I mean, that was handheld camera work, definitely not like super high-end editing, and look how much money it made. The return was astronomical.
It kind of feels real, right? Like when you see
Yeah.
it kind of grainy and stuff. Anyway, all right, guys, we're going to be back. We've got some earnings after the close. We're going to wrap up this Halloween Tuesday, and also wrap up this month, not quarter. We're almost there, but not quite. All right, we'll see you again, guys. Join us at Beyond the Bell, 4 p.m. Wall Street time, radio, TV, YouTube, and of course, Bloomberg Originals. drop because we're just under 24 hours away, Jess, from the next Fed decision, FOMC. We got some economic news today. We talked about it, right? Consumer confidence down to a 5-month low, dropping to a 5-month low in October. And then you got employment costs unexpectedly accelerating in the third quarter. So that reminds us we've got a strong, strong labor market.
And especially with some thoughts ahead of this FOMC meeting, back with us is Dr. Steve Shanke, chief economist and advisor at Keel Point and former staff member of the U.S. Treasury while White House National Security Council. And then, of course, Steve is on Zoom in Mexico. Also with us is Bloomberg Economics' own U.S. economist Stuart Paul, here, of course, in the Bloomberg Interactive Brokers studio. And so, Stuart, I wanted to kick off with today's data. So we did get a lot of indications here what wage growth does look like in the economic snapshot, obviously, of the economy when you are thinking about Fed Chair Jerome Powell tomorrow. What are your thoughts, and do you think that the Federal Reserve should do? Because we're not going to get those quarterly economic projections or the dot plots tomorrow.
So it was a bit of a shocker to see the employment cost index tick up in Q3. It departs from what we've been seeing with the Atlanta Fed wage tracker, departs from what we've been seeing in the non-farm payrolls report, where we've had modest wage growth. That's actually been relatively consistent with 2% inflation, with the Fed's 2% inflation target. We don't think that the Fed is going to be in a position to hike tomorrow. 97 some odd % odds, market implied probability that the Fed's going to maintain its current policy rate when it makes its announcement tomorrow. And we think that that is the right move, though I wouldn't be so presumptuous as to tell Chairman Powell how to do his job.
I wouldn't either. Having said that, wait, I want to bring Steve in too, because what I think about, a very wise individual said to me that Jay Powell, he's a lawyer, and he looks at the data in front of him, Steve, and that's what's going to determine the decision he's going to make on any given FOMC day. Having said that, so what is the data playbook that Jay Powell and company will be dealing with when they make that decision or just ahead of that decision tomorrow?
Well, I absolutely agree, Carol. And the data that he has in front of him is a little bit overwhelming, just because it's so broad. I mean, we had this 4.9 GDP growth number, but you know, consumer spending was up 4%, and a rebuilding of inventories, which is a big variable, was up. So how do they discount that? Maybe he'll say something about that in his comments. As Stuart said, the employment cost index unexpectedly up, but at the same time, year over year, private wages and salaries were down a bit. Unemployment is not likely to fall. Wages are looking to be on a downward trend when we look forward, and I think that the Fed can probably see that. So the discussion, even with no rate increase, no change in tone, I think would be very interesting as Chairman Powell answers questions about these data that are a little bit inconvenient, but at the same time, he has a lot of other things that he can fall back to and
Right.
point to.
Well, come back in, Stu, because I do wonder in terms of, you know, what you think will be top of mind, or the message that he's going to need to get across in that press conference, or what he might be, you know, questioned about the most. Because I feel like we've all know, okay, no decision, so we move to the press conference.
Right, so moving to the press conference, here's just a typical strategy that Powell deploys at the press conference. If they were to ever make a hawkish move, he ends up sounding a little bit more dovish during the press conference. If they do something that's a little bit, you know, incrementally dovish.
I know that playbook. I know that Fed playbook.
Right, exactly. And you just hold on to your seat as you watch equities move when he's in the middle of the press conference. But when they make something that's a little bit more dovish, when they hold rates steady, as they will tomorrow, he's going to most likely sound hawkish. He's going to talk about the persistence of growth. Even if he takes Steve's really important points into consideration, about 30% of that 4.9% Q over Q growth that we saw in Q3 came from inventories. That doesn't exactly scream like organic growth in the U.S. economy. Even if you were to take that into consideration, he's going to end up saying every meeting is a live meeting. They're only making decisions for today. They're not making decisions for tomorrow. Based on the latest SEP, they're still showing another rate hike this year. So he's going to end up sounding a bit more hawkish at the press conference.
Interesting.
How much does that job boning stew feed into the mistake from transitory that he dropped almost 2 years ago?
You know, I think that it is still something that they think about. They don't want to end up with egg on their face in perpetuity. They do want to end up showing some sort of dedication to bringing inflation back toward the 2% target after having made such an important misstep and being so all too confident that inflation would come down naturally, and instead they're actually having to put in a lot of the work. And given the fact that the U.S. hasn't been especially interest sensitive in their spending to date, and it's taken a lot more hiking than anticipated.
Right.
I think that any sort of hawkish tone may exactly be part of that jest, and may be part of that legacy of dealing with that transitory egg on their face, so to speak.
Hey, Steve, one of the things that I thought was really interesting, we've got a great story in the Bloomberg about corporate credit strength, and that to really, tame inflation, the Fed, they're looking to tighten those financial conditions across the economy, but they really haven't made much of a dent in corporate America yet. So we're talking about, we look specifically at the extra yield investors' demand for risk in the U.S. investment grade and high yield bond markets, which has remained below their 20-year averages and well under levels seen during historical times of stress in the economy. And borrowing remains robust. So would the Fed like to see that tighten up a little bit and not be so upbeat that there's more work to be done? They look at things like that.
Well, they certainly would like to see the market providing less liquidity. And that goes right to the point that you make. But they're also very wary, I believe, notwithstanding wanting to continue their hawkish tone, of doing anything that is going to fuel a further sell-off in the bond market. They seem to be happy with where mid and longer term rates are, and so while they might not be particularly happy with all the liquidity that continues to exist in the corporate market, my belief is that they'll be patient about it.
Can I ask you, do you feel like the Fed's getting close to a neutral rate?
Yes, I think that they are. Just the comments that some of the governors, FOMC members, and Jay Powell made this last week, they seem to be getting comfortable with that. I mean, to Stuart's point, they don't want to let up on their hawkish tone, but when you sort of parse out some of the things that they've been saying recently, I think the answer to that is yes.
Stu, we also have another wild card for tomorrow with the refunding in the Treasury market. What are your expectations, and what do you think that could mean for yields as far as what that pressure could mean for maybe longer duration growth stocks in the equity market?
With growing auctions, with higher deficits than had been previously projected, there's reason to believe that even just the term premium that had been getting blown out, that had been raising the entire yield curve, that has been front of mind for Fed policymakers, could even just get blown out even further. One thing that's super important, though, is that when you see higher long-term rates moving as a consequence of a larger term premium, it means the Fed has less work that it has to do. It could sort of sit back and relax, not really relax, but at least wait to see the economic consequences of higher long-term yields continuing to ripple through. So, for example, while the Fed had been doing most of the heavy lifting, deeply inverting the curve, raising front-end rates as aggressively as we've seen at any point in the past 40 years, now with longer-term rates catching up as a consequence of a larger term premium, the Fed can sort of slow down. And I think that is downstream from fiscal policy, and that is going to be an important factor tomorrow.
Yeah, you do feel like, hey, the Fed gets a little bit of an assist, I wouldn't mind. Steve, saving the last 45 seconds, minute for you here, in terms of the specifics on that refunding, how does, you've worked at Treasury, how does that factor into, and you've worked at the government, you've worked at the White House, how does that factor in, you think, into the Fed's thinking?
Well, they had to be aware of it. They've gotten caught up on this a couple of times in the past on their repo activities. So they're certainly mindful of it. They want to be respectful, and the Treasury Secretary has indicated a point of view that maybe isn't fully embraced by the market. But I think that the Fed is going to be sensitive and accommodating.
Going to be interesting, very interesting. Hey guys, thank you so much. I feel like there's a lot going on, but we need a little bit of a setup ahead of that Fed decision, which, 24 hours from now, less than 24, it will be front and center for all of us. Guys, thank you so much. Bloomberg Economics U.S. economist Stuart Paul joining us in our Bloomberg Interactive Broker Studio, along with Dr. Steve Skanke, Chief Economic Advisor over at Kill Point, as we mentioned, former staff member at the U.S. Treasury and the White House National Security Council, joining us on Zoom in Mexico. All right, folks, just getting started on this Halloween Tuesday. We've got yields bouncing around. We've got the markets, the equity side, a little bit higher. Stick around. Jess and I are back in just a moment.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. We have got 39 minutes to go ahead of the closing bell. 39 minutes until we wrap up the trading month of October. S&P 500 index on track for a third monthly drop. Its longest losing streak since March of 2020. The S&P right now, best level of the day, though, up 25 points, up by about 0.6%. Dow Jones Industrial Average up 112, up 0.3%. The NASDAQ Composite Index up now by 58 points. For NASDAQ, that is a gain of 0.5%. 10 years yielding 4.88%, with a 2-year now at 5.06%. Gold down $10 the ounce to $19.85, a drop of 0.5%. And West Texas Intermediate crude down 1.4%, $81.15 a barrel. Federal Reserve policymakers have begun their 2-day meeting with a decision expected tomorrow. Kathy Jones is chief fixed income strategist at Charles Schwab.
Everyone's expecting the Fed to remain on hold, keep the door open to further rate hikes. Whether they actually hike rates again is a question mark, but I think that the communication is still that inflation's too high and the Fed will want to, give themselves the option to tighten further if necessary.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. Zillow Group and other real estate stocks are plunging after a Missouri jury found the National Association of Realtors and other industry players guilty of colluding to maintain high brokerage commissions. Zillow shares down 6.8%. Among the names reporting after the close of trading, Advanced Micro Devices, AMD. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. AMD to watch after the market close, but while we are open, we are definitely focused on shares of JetBlue. Jess, I don't know how much you've been talking about this company today.
Oh, so much, especially just given that it's on pace for its biggest decline since the onset of the pandemic, especially as we know with just airliners in general getting hit hard in recent months. And then again, looking at its outlook and cutting back on some flights here, especially ahead of the holiday season.
What really caught me was tumbling the most since those early days of the pandemic. Like, we remember everything was shut down. So, of course, it took a hit. To see it do it again is pretty remarkable. Let's get to it with Bloomberg News U.S. Airlines reporter Mary Schlangenstein. She's on Zoom in our Dallas bureau. Hey, Mary, good to have you here with us. As we said, shares of JetBlue just tumbling in today's session, quite a hit. What the heck is going on? They talked about too many seats, staggering delays. Explain it. Play it out for me.
Right. Well, JetBlue reported their third quarter financial results today, and they missed analyst estimates by quite a bit. The loss was greater than had been expected. And then on top of that, they said, well, the fourth quarter is actually going to be worse than analysts expect, as well as the full year in terms of earnings losses. And so I think that was much worse than anybody had expected. Some of the others, mid-sized airlines, had been talking about this excess capacity, cutting of fares to try to fill the planes. But I think JetBlue, just in general, surprised everybody by the depth of the negative impact on their financial.
Is it basically because of stuff going on here at U.S. airports and U.S. demand specifically?
Yeah, it really is. The larger carriers that have global networks reported record revenues and profits for the quarter and expect to do so for the full year. But airlines that are focused on the domestic market, the problem that they're having is they put too much capacity into those markets. Now demand is sliding. It's weakening, especially on days of the week or weeks during the fall that people don't generally travel. It's gotten worse. And so Spirit even said, hey, even the traditional buildup in fares and demand before the holidays, we're not seeing that this year.
Interesting. Hey, also with us is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson from our BI headquarters in Princeton, New Jersey. George, come on in on the conversation. What really jumped out for you at JetBlue? We've talked a little bit about these too many seats, staggering delays, the impact of the domestic U.S. market on JetBlue, but what for you was really dramatic here?
I mean, I think the yield declines, was what stuck out the most to me. I think it was around 13% yield decline. I think I was catching the end of what Mary was saying there, but I think the undertones I heard was all about leisure demand and the problems around leisure demand. I think a lot of the airlines are just pointing too much of their capacity at similar places right now, because there's only so many leisure destinations. And I think that's having, a pretty big effect as well, because I think business just hasn't come back as much as everyone had hoped. And I think that's part of the problem with profitability in New York for them.
And George, analysts have cautioned that airlines may have overdone it by adding U.S. flights this year. How much does that play into it when it comes to JetBlue specifically?
Well, I mean, JetBlue, a very domestic U.S. focused airline. There's a bit of Caribbean in it. and they're trying to, expand into Western Europe, but that's very small right now. So, whatever is affecting the domestic market, it's going to be really, really, really hard for JetBlue to avoid. I did think it was also interesting they talked about trying to pivot more into Europe, especially here during the winter season. I kind of feel like the European bounce might be over. I think flyers were willing to pay almost anything it took to get to Europe this summer because they had a hankering. They hadn't been there for a while. But I feel like that pandemic frenzy, if you will, is probably done next summer. And so I feel like any pivot there may be a bit too late.
It's like chasing returns in a stock market. You know what I want to ask both of you? I feel like for such a long time, we all lauded JetBlue. They weren't, they didn't have overhang from some of the legacy carriers in terms of either worker costs, unions. They had new planes. Like there were all these, kind of wonderful things playing in their favor. Mary, is some of what's going on with JetBlue is that they themselves are becoming more of a legacy carrier, and it just maybe, or their specific business approach just doesn't play as well?
Well, they do have some unions on their property now, and so they
do.
did call out labor cost increases as part of the problem this quarter, as well as fuel cost increases with the price of jet fuel going up. But, and they don't operate an exact hub and spoke system like some of the bigger airlines do, but they do have focus cities that they concentrate a lot of their flights out of, New York being one, Boston being another. And so, they also called out ATC, air traffic control delays in the New York area, which is one of the biggest or the biggest aviation market in the country. And so there have been some restrictions on flying put in place there that JetBlue said they expect to last all the way through the end of next year.
Yeah, which always kind of freaks me out. I just want to get George, though, to weigh in on this whole idea of, that JetBlue, right, was so different from the legacy carriers. There's a lot that's gone on, though, since JetBlue first hit the runways. What's your take on that, maybe some of what they're doing it maybe needs a freshening up, if you will?
Yeah, I mean, it's hard, right? Because the pilots, for example, in the past, if you're a smaller airline, maybe you could get away with paying your pilots a little bit less. But in a world now where we feel like we're constrained by pilots, and you're recruiting, you need to push those salaries up as well. To recruit flight crew and keep them in your them in your airline. I mean, we're hearing hopping from pilots that was unheard of, a decade or two ago, where even they get into a pilot job at a low-cost carrier, and then they'll hop again. Right, and to a major like Delta, American, United, seniority is everything in the pilot business. So when you get your job, you get a seniority number. As you climb the ladder, you can bid on better trips. You can make your life easier based on that. So pilots traditionally hadn't moved. So I think JetBlue, as we find ourselves constrained by things like pilots, as they get larger, the work groups also want more pay commensurate with what the larger airlines in the country have. And so, yeah, it's really, I think it's a difficult industry, I think, for carving out a special place for your labor costs or anything else now. It's hard.
Hey, Mary, how does this impact the outlook for ticket prices during the holidays?
Well, some of the carriers are saying that they believe demand is going to come back in the fourth quarter. And of course, if that happens, and there's not too much capacity out there, then fares could rise as they traditionally do. In fact, I had some information from Hopper last week that said they do expect fares to rise as we get closer to the holidays. People, even though they may have been focusing on European travel over the summer, that when it comes to the winter holidays, they want to be home and they want to be with family. And so if that's correct and demand rises, then prices are probably going to rise as well.
Hey, George, JetBlue, Spirit, is that going to happen?
And the stock price of Spirit doesn't seem to indicate that, right? And so, look, we hear a lot of chatter in the marketplace, right? There's a lot of challenges to this deal, right? Not the least of which raising $3 to $4 billion right now. I mean, if you even look at the prices that companies are raising debt to buy airplanes, if you look at the United EETC deal, that's almost a 7% yield to worst. So that kind of insinuates that would be the cost to raise money for airplanes right now. It gets expensive to raise, those large numbers at those percentage rates and make the whole thing work. The market is different too. We look like there's too much capacity, so it feels like capacity needs to come out. How much do you want to pay up for for more airplanes and more capacity? I don't know. It's a rough backdrop for that deal right now.
It's a tough industry. I got to say, for the first time, was it in the last month that I flew coast to coast, east to west, and there was an empty seat in business. And I was like, what? Because that never happens. You both are dynamos. Thank you so much. I know it's been a busy day for you, but we really appreciate it. Bloomberg News U.S. Airlines reporter Mary Schlangenstein out there on Zoom in our Dallas bureau, and then in our Bloomberg Intelligence headquarters in Princeton, New Jersey, George Ferguson, who covers the airline industry.
Now let's get a check on the latest world and national news with Nancy Lyons in our Washington, D.C. newsroom.
Thanks, Jess. Hamas says it will be releasing a number of foreign captives within the next few days. A group spokesman says Hamas has conveyed that to mediators, but Israeli officials say Qatar mediators tell them there is no deal in sight. Another concern has been humanitarian aid to Gaza. National Security Council spokesman John Kirby says 66 trucks have made it in over the last 24 hours, with more coming, but he admits fuel is the biggest need right now.
Fuel is going to be critical here, certainly in coming hours and days, as the existing stocks are running low to near empty.
Kirby says while aid is making it into Gaza, they're still working to help those who want to get out of Gaza, including Americans. He says sending in Jack Lew as U.S. ambassador to Israel will help. Lew was just confirmed today by the Senate. FBI Director Christopher Wray says the terrorism threat in the U.S. has reached a whole nother level since the Israel-Hamas war began. He warned a Senate panel today the threat is not just from abroad.
Not just homegrown violent extremists inspired by a foreign terrorist organization, but also domestic violent extremists targeting Jewish or Muslim communities.
Wray says they're hoping Hamas will not inspire others to seek violence. President Biden and Chinese President Xi Jinping will have a face-to-face meeting next month.
It's going to be in San Francisco. It's going to be a constructive meeting. The president's looking forward to it.
White House Press Secretary Karine Jean-Pierre says she expects intense diplomacy between the two leaders, but said it was too early to go into specifics. As we celebrate Halloween, you may want to consider in some parts of the country there are laws against houses being too scary. Legally in the U.S., a trick-or-treater can sue a homeowner for scaring them too much and causing emotional stress. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
News, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. 20 minutes to go until we wrap up the trading month of October. And this update is brought to you by Glen Mead. Glen Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. And now over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the green right now, with the Dow currently up 62 points. S&P's gained 20, and NASDAQ is higher by 42. The U.S. 10-year yield at 4.87%. Gold is down 10. Oil trading in the red, but Bitcoin is higher by 0.25%. Among the main 11 S&P sectors, all were trading in the green, led by gains in real estate and the financials. Leaders to the upside in the Dow, Boeing and American Express, while Amgen fell 3.6%. and led to the downside. After earnings, Caterpillar fell 6%, Pinterest climbed 19%, and in other news, Tesla prevailed in the first jury trial over a fatal autopilot crash. Wrapping things up, some of the names reporting after the bell tonight include AMD, First Solar, and Match Group. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 17 and a half minutes left in today's trading session on this Tuesday, October 31st. As you just heard from Charlie, equities just kind of rolling over, but little change, a little bit higher on this basically FOMC eve. I'm Carol Massar along with Jess Metton in for Tim Stenovic on this Tuesday. It's an interesting market, but it does feel like we're just kind of waiting.
It definitely seems to be the case, especially at the end of October, which technically is the most volatile month of the year, but the worst one is actually September, followed by August. So hopefully maybe we're getting into a better seasonal period.
Santa Claus rally, don't even go there. All right, let's see what Jimmy Lee has to say. He's founder and CEO at the Registered Investment Advisor Wealth Consulting Group. He's on Zoom from Are you in Georgia today or Vegas?
I think he's in Vegas.
I'm at the Highlands in North Carolina, actually, Carol.
So neither.
You know, you travel more than we do. I don't know. We just talked about the airlines, like domestically having some issues. You are flying around.
I support the airlines.
I know. Well, having said that, would you be a buyer of airlines after that JetBlue news? It's really tanking in today's session.
You know, with oil prices high, I think that that's an area that I would probably be cautious with right now. But overall, earnings so far has been really good across the board. I mean, of the companies that reported last week, I think 160, over 80% beat earnings with an average of 9.2%. That's actually from Bloomberg. We had a research committee this morning call, and we were doing some research with Bloomberg, and that's from you guys. And then, including this week, we have twice as many upgrades as downgrades. So companies are navigating this high interest rate environment. And of course, we saw the GDP number in third quarter was phenomenal. And the consumers are still spending, surprising everybody.
All right, full disclosure, because that's how we are at Bloomberg. That's how we roll. What do you mean you were doing some work and research with Bloomberg?
Well, we have a Bloomberg terminal as well. And our investment committee, our CIO, does a lot of work on the terminal with research and so forth. So that was one of the statistics that we were looking at. Was just the earnings updates for companies last week and this week so far.
Okay, we like transparency. No, but earnings make sense, Jess. We're in the midst of it. We're on the other side of it, right, in terms of the bulk of numbers.
If you're not buying JetBlue, what stocks are you buying?
Well, let's talk about fixed income still. So we think that we're at the top of the cycle on rates. And while rates have been very volatile for the last 30, 60 days, We think that leaning into duration, I know a lot of other investors have done that, but leaning into duration now, I think, is a good, safe bet for the next few years. Maybe not short-term trade, but for the next few years.
How far out would you go? How far out on the curve would you go?
Well, believe it or not, we actually added some zeros so that we could add just a teeny bit to get a lot more, potential benefit from it. So, but I think adding duration past, even 7 years might make sense for a lot of investors. For your long-term money, I think it's one of the easiest trades to make long-term. On the equity side, I think that the interest-sensitive sectors that have really been beaten up lately, real estate, tech stocks, I think that have an opportunity to take another run before the end of the year. And so I'm glad that there's still a lot of bearish people out there. And but I think what could happen is that, the Fed probably won't raise rates tomorrow, right? According to the futures market in December, probably not as well. A lot of investors think that they're done. And if that becomes a consensus that they're done, I think there could be a lot of money down the road here chasing equity soon.
You mentioned real estate. That sector in the S&P 500 up about 2% today, well outperforming the other industry groups. What is it particularly that you like about real estate?
Well, publicly traded real estate stocks have been, discounted off of the whole value of real estate in general last year and continuing with this year. And so we think that there's value in publicly traded real estate. I think you should be very active with that investment and, maybe not necessarily overweighted too much, but there are areas that have been really beat up with interest rates going higher. That's one of them. And so I think historically speaking, when that's happened before, the public real estate market